Morning all. Sorry, talking in your Telegram. I forgot I was live streaming. I'm sitting here with the holding screen up, talking in Telegram. Morning everybody. How's everybody doing? Daniel, US dollar CAD 1 minute buy. Good luck. 1 minute. How's everybody doing? So Aussie dollar moved overnight. Big difference, Aussie dollar. We got 4.1 off of 3.85. Forecast was 3.85. So big moves on the Aussie overnight. The forecast, where's my pen gone? Where are we today? Yes. It's in a different place every day. So yeah, forecast was 3.85. We got 4.1, so higher than expected, which is kind of what I said yesterday in the live room. 3.85 wasn't enough, so they did actually go with the increase. So big spike up on Aussie dollar this morning, not as big as I was expecting on a positive increase. I would have expected this to go a lot further, and obviously with days not started yet, so it could do. However, we got straight up to ADR, ran out of steam. So we'll see what London makes of this. The Aussie New Zealand specifically has been squeezing for days now. So this could well come back down again from here. I've got an aggressive drawdown control position placed under my head. There. So drawdown control done this morning, as you can see, 3.24% loss. Had to scale out of this Aussie New Zealand. Banked 2% yesterday on the H1 M5, but yeah, still in 3.7% of drawdown because obviously this thing's just gone the wrong way. So we'll have to watch this today. The last two rate increases we've had, whether they be forecast or not forecast, have been negative for the currency. The euro and the New Zealand both had rate increases, both collapsed. Yeah, so New Zealand dollar rate increase, boom, collapsed. The euro rate increase, not there, but a bit further for the euro one, but collapsed. Yeah, so these positive rate increases we're getting are not necessarily being bullish for the currencies at the moment. As you can see by this one, obviously the euro wants now come down, had to do scale outs on that one as well. So yeah, big move, but we'll be keen to see what happens today with the Aussie. It seems to have stalled here, but it's trying again. So we'll see if we get any further movement on it. So ADRs, obviously all Aussies hit ADR, not rocket science. If you want to mean revert them, feel free. 5-minute reversal alerts, get in. You've already had the entry on Aussie New Zealand, for example. We'll see where they go. They could well continue to go in the direction they're going. We'll have to wait and see. So that's basically the news overnight. Today we've got IV PMIs for the CAD at 3. That's it for news. So there's no more news, and it'd be interesting tomorrow. I think there's a chance that this lot could all get undone. Low could come out basically and say, we've put it up this time. This is the last one. Boom. I don't know. We'll see. We'll see what happens. But no other news today. So 4.1 there. Other than that, the other rate we've got coming out is the Canadian dollar. Again, forecast 4.5. So we've got a stable rate on the Canadian dollar forecast for tomorrow. That should be bearish. Again, these things are just not doing what we expect them to at the moment. So looking at the other overnight news, nothing else came out from Japan. So I always scan the news in the morning for any news out of Japan about them keeping an eye on FX rates to see if there's an intervention on the cards. There's nothing at the moment, a bit quiet. China are expected to increase RRR and interest rates. Yeah. Spending. So that was the main, obviously, news, the spike on the Aussie. The board is steadfast in its goal to return inflation to target. although last time we decided not to put the interest rates up, so we weren't as steadfast as we thought we should be, which is why we've got the increase this time. Further tightening may be required. So again, not further tightening is going to happen. We might have to obviously see what goes on. So the market seems to be factoring, like Deutsche Bank just said, market should price in one more RBA hike. One more hike only takes them to 4.1 or 4.15. Oh, we 8.5. Yeah, 4.1. So 4.1 will be the terminal rate for the Australian dollar potentially. So if we look at the fundamentals, we've got 2 minutes to the open. We're now at 4.1 with a 0.25% increase. Still lagging behind still lagging behind everybody apart from the euro. Obviously, kind of ignore the Swiss and the yen. They're a little bit outliers, but the main economy is obviously the euro. Is the only one lagging behind at the moment. We've got 2 increases forecast from Lagarde up to 4.25 as a minimum. I suspect it'll be more than that. Depends what happens with this. But their inflation obviously far too high still. So, sorry, 4.1 is what we're on now. Sorry. So 4.35 will be terminal rate, not 4.1. We were on 3.85. So 4.35 will be their terminal rate. Might be. So that's overnight news. DAX opens in 1 minute. Let's just watch the DAX open. 14 seconds to go. And we're off. Long. So pre-market break, which is what I'm trading here, is long. Not particularly exciting this morning. It seems to be getting underway a little bit. See where this goes. Let's just have a quick look at the DAX, where we've got potentially to go today. There's your 15-minute pre-market. That's not quite triggered just yet. Trying. We had the gap fill this morning, so the gap fill was done immediately. We've got this huge move from yesterday on the DAX, potentially to come up and find some resistance up there. So, oh look, it's HelpyFX again, everybody in the chat. Give them a wide welcome. HelpyFX. Report unwanted commercial content or spam. Goodbye, HelpyFX. Back virtually every day now, aren't they? Love them. Better. One sec. Right, gone. Okay, so breakout to the upside on the DAX is done. Target 1 hit. Trailing second half. There's your 5R return up in this gap. So good breakout this morning. Job done. Money in the bank. $780 banked, and obviously we've got a trailer running on it at 1200 at the moment, so guaranteed about $1,300. See how that goes. Aussie's pushing at the moment again. So DAX this morning didn't quite get there. Haven't had a chance to look at it this morning. So we're looking at this gap fill, obviously, at the moment. We obviously drove down to it yesterday. We were having a discussion on yesterday, weren't we, about these gap fills and how we could put a gap fill strategy together with an EA to test all of this. So let me just quickly close out the position here. Oh, wrong button. So gap fills yesterday, we were looking at potential for an EA to do this, which is obviously easy enough to do. But it's how quickly these gaps get filled. Typically, you find as I said, it's something like I've done the statistics on it. It's something like 78% get filled. I think it was 78. I have to look it up. 78% of gaps get filled within a week. Over 50% of them get filled the same day, as in the little ones. So it would make sense today for us just to come down and get this gap sorted. Then the market's free to go wherever it wants, basically. This the inefficiency in the market. It's the guys that get left behind that drive the price back to balance the books. So that one there. I would suspect a downside movement potentially today, just to get that done. But they may want to push back up and retest this area and see if there's more sellers up here, because we had that big sell-off yesterday. So could go either way, obviously. We just go with momentum, which is what the opening range breakout strategy is all about. But those are your targets today. So this propulsion gap here, we've got this one here as well, but this was the initial propulsion gap that broke the accumulation. That's the one I would expect to act as resistance on the way up. So target there. Maybe yesterday's high. Yesterday's high is ADR. It's going to take a lot to get up there, I think, today. So more than likely, we're just going to push up to there, break down, or we're just going to break down, fill this gap, and then potentially go obviously wherever we want from there. Downside targets are last month's low, which is 175 ADR. Again, no news today, no catalysts that should drive it down there unless something happens. We had an escalation in the war in Ukraine yesterday, or we think we did. We're not sure, because obviously the news that's coming out is from Russia, so we don't know. But the spring offensive is about to start. Obviously, an escalation in that could well escalate with other countries as Ukraine requires more weapons and everything. If that starts to happen, we could see some kind of tank in the indices. Excuse the pun. So we'll see what happens, but just be aware that anything that comes out of Russia that is aggressive tends to be negative, and especially the DAX. The DAX is the one that really, really tanks on it. Okay, so your 15-minute opening range break, you got a 1 hour return on that this morning. There's your 5-minute opening range in. So any break of that today potentially will be the start of the day's move. Right, there we go. What did we do on this then? $1,400. That'll do. So that's it. DAX is done. In, out. Thank you very much. See you this afternoon. So there you go. There's a DAX this morning. Nice and easy one. Right. So I'm just going to run through all the ADRs and the RSIs. Obviously, the ADRs today are all based around Aussie dollar. So everything we've got here is Australian dollar. Hits Aussie dollar CAD. See these wicks to the upside. This really doesn't look like they're particularly convinced by this. This is obviously a knee-jerk reaction to the news. Market was expecting a 3.85. It got 4.1. So they're like, oh, that's great. And then hindsight kicks in. And it's like, well, actually looking at it long term, when the analysts have got hold of it and really looked and crunched the data, they will probably go, not too sure. Otherwise, you would have seen this just completely fly, because they would have had a plan in place for this. But lots of rejection showing at the moment up here. This is the previous month's high. Sorry, no, it's not. This is last month's low. Yeah, so this is 2 month low. That's what I meant last month by previous month. So this is the previous month's low, that support there. We came back down into it, kind of retested it a little bit, pushed down through, we're pushing back up. So it's not a particularly strong one. It was back there, but here we didn't really pay much attention to it. So it's not quite as strong. So upside targets on this today, if we are going to get a continuation rally, obviously could be absolutely anywhere. We can easily see 200, 300% ADRs moving up. However, we've got this peak here, this kind of double, triple top here of that 2 week ago high sitting in that propulsion gap, which is that resistance. Yeah, so that support there was what turned into that resistance there. So upside targets, if we get a 175 into that propulsion gap and that weekly resistance, that would be where I'll be looking for a drop. Otherwise, it could obviously just drop from here. Don't forget, this is in a downtrend, the Aussie. Yep. So although it's had positive interest rates, the market has since when it last did its interest rates, wasn't happy with it. They froze. Yep. So it's coming down at the moment. As you can see across the board, it's a weak currency. So the fact that we've had this rally on an increase in the interest rates does not necessarily mean it's going to continue. It might do. We don't know. You just got to deal with obviously what you're in, but pretty much everything on this is a sell at the moment. So look at the buyer scorecard as well. Not a lot changed there. Aussie US is still a sell. Aussie CAD is still a sell. Everything else is pretty much neutral. So it's neutral to weak, basically, across everything. So there's nothing really I would suggest is to worry necessarily about this. However, obviously, with these fundamental shifts, when we get differences in interest rates, they can just go. So just be a little careful when you're taking these. Just follow, exposure rules. Don't get into everything short because everything's got extended. But everything basically 5-minute reversal alerts. Just wait for them to trigger. And then obviously you can get into whatever you want to short. There's your reversal alert. Beautiful end pattern there, look, on Aussie CAD. That's those wicks on the hourly. Aussie dollar Swiss, you've had the reversal alert there already on that one. Nice end pattern going in. Market structures looking good on that. High, low, lower, high. Didn't quite get the lower, higher low there. So it's kind of contracting into symmetrical triangle. And again, this is a bullish symmetrical triangle break, potentially. So either is on the cards, obviously. Aussie dollar yen, haven't had the reverse alert on that yet, but again, rejection. So this is the initial move off the news. And then there was like, well, hang on a minute. Is this good news or not? Just hit a brick wall, isn't it, basically, across the board. So not convinced. So I've got an aggressive position on the Aussie New Zealand on a break of that low. So this basically, if this turns into an M pattern, I'm on. Basically, so we'll see. But they've had the reverse alert there, so there's an entry there on that one already. And Aussie US, that one hasn't broken yet. There's your entry there, so made a new high there on that one. So wait and see on those. And pound odd obviously is the inverse. Euro odd hasn't hit yet. It's not far off. Oh, it is miles off actually. That's interesting. So Euro odd basically just didn't get much movement. It did get the movement down. You see two drawdown controls triggered down there. But yeah, big hit to the downside. Had a reverse alert on that now as well, but it's not hit ADR. So pound odd has hit ADR. Again, 125 ADR. The reverse alert is going to kick in there. Drawdown control done. So it's we can't really tell at the moment. Obviously, this was the initial reaction in Asia. If it's a big, strong fundamental, you typically see it just continue to go. It hasn't. It's stalled. And we need to see what London makes of this. There's every possibility of a complete A-shaped recovery on this. And then tomorrow, when low speaks, flip it and go the other way. So it is still weak. DAX is continuing to break to the upside. No, it's not. Sorry, I'm looking at the NASDAQ. Sorry. I was trading the NASDAQ on the DAX breakout, if that makes sense. And NASDAQ's rallying. So there you go. So there's your ADRs. That's all those covered. Best ones obviously being Aussie Swiss and Pound Odd because they are the most extended. But just wait, be patient with them. Every chance that these will just come and return to origin. So if we get that bounce, yeah, we can either... Often we'll do that. It will just undo the entire move. You get that kind of A-shaped recovery and then it goes. Or you get the A-shaped recovery because this initial knee-jerk reaction is not what the market wanted and it flies back the other way. So obviously you can never tell. Just don't get overexposed on them. RSIs, Aussie dollar CAD, extended on the hourly. So RSI extensions to the upside. Beautiful rejection on this one. Nice extension just above the 70 there. Hasn't got quite extended to where I'd want it to. I want it to be above the 75. So yeah, ADR reversal definitely. H1 depends whether you're using the 75 or the 20 or the 70, but that's an entry if you want that one as well. Aussie dollar US dollar on the hourly as well. extended. Again, got short on this one already from Friday last week. Drawdown control done. We'll be taking the next reversal alert short as a second entry on that. It's an ADR away. So ready to get in when that triggers. $64 is ADR. Let me just work out what 3/4 of that is. 48. Yeah, so any reversal alert, any candle that closes basically above that level is going to give a second entry on that one for me. So yeah, looks good. Extended. US dollar news this week. We've got CAD. We got the PMIs this afternoon for the CAD. May or may not do something. Other than that, we've got to wait really until the unemployment claims on Thursday for anything US dollar related. Obviously, the US dollar is going to move dramatically on the CAD rate, assuming we get a dramatic move on the CAD rate, obviously. But so we've got no news catalyst coming until Thursday on the US dollar. So we're going to be reliant basically on just normal US dollar strength coming through to drive this one back down. So if we get a weak CAD news, obviously this is going to continue to push potentially. So only one on it at the moment. Second entry going in, obviously we're extended again above the 75 level. So again, another good reason for a short, especially down into that level there. So second entry when that goes on somewhere up there will bring the average up into there. An exit would be possible then back on a retest of the return to origin move if they do that. Propulsion gap targets galore to the downside on this as well. Look, target there's a massive target there. We've got this bit down here. So it's coming back down here. When, we don't know, but it's going to come back and it's going to retrace this move at some point. So just waiting, just one position on it anyway. But that's a good entry. So again, just drop down, wait for the reversal alert. It's an ADR and an hourly RSI extension. So both of those good. Euro odd. So this one obviously isn't an ADR, but it is an RSI extension. So extended on the hourly. We're also extended on the 4 hourly on this one, massively extended. We'll have a look at the 4 hours in a sec. But again, really good rejection wicks down here. So market just stalled out, got the news, and it went, yep, fine, let's have a look. And it's just stalled out. So to me, obviously, when you get lots of long wicks in one direction, it means the sellers either there aren't any more, they're not interested in selling it anymore, or there are a lot of people interested in buying at that level. Either way, it's more bullish than bearish. So it remains to be seen whether or not London is going to be bias long or short on the Aussie. And obviously we'll find out in the next couple of hours, really. If this starts to rally back up again, I suspect the US will do the same. So we'll get a continuation and potentially that recovery on it. So nice extension there. An initial entry was all the way back here. Second entry's already gone in. Third entry will be going in shortly. Average is up there at the moment. That will come down, obviously. So looks good for an entry long. Pound odd is the same. We've looked at this one. This is an ADR extension, so it's exactly the same. Extended. We got extended and embedded. So these are all doing the same thing. Good extension, good opportunity to get in long. Propulsion gap targets galore to the upside. So some point coming all the way back up to there. Pound CAD is extended as well. So that's a nice entry. First entry. The hell's happened there? What's that? Excuse me, Pound CAD. What the hell are you doing? Right, so that's closed out with a profit, that Pound CAD. There's a candle missing, isn't there? That's confusing. Let's just right. That candle there is actually down there. Just hasn't drawn that candle in. So I was looking at it thinking, why have I got something there, a line there? But if you go down to the 15-minute chart, it all becomes clear what happened. So basically, that's position one, taken this morning. It drove down. We got a second position on, and then the news hit. No, that was yesterday. What the hell's going on here? Tuesday. Sorry, this is confusing the hell out of me. What is going on with this? Why is Monday and Tuesday? Why is Monday half the size of everything else? Why have I only got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10? I've only got 10 hours of data on pound CAD on the hourly chart. Not seen that before. What's the timestamps on this? 5th. It's yesterday. 3:45. Hourly chart's knackered, isn't it? There's a lot of candles missing there. So that just looks odd, but that's trade closed out yesterday. So is that RSI extended? If the data's not there, then the reading on the instrument's going to be wrong. Judge for yourself on that one, that pound CAD. I don't know what's going on with the data on that. That's really weird. I've not seen that before. It's just like they've wiped out 6 or 7 hours worth of data yesterday. So we'll assume that is extended. Looks extended, but I'm out anyway. So there is another entry on that. Let me just have a look at the VPS. One sec. Pound CAD, where are you? Yeah, this is all there on the 5-minute. RSI, where are you? Yeah, that's not extended on the hourly, that pound CAD. It was there, it's not extended, so that's not the right reading. Ignore that pound CAD RSI. That isn't an RSI. That's weird. This is a really good example of why you trade your own charts. Yeah, don't follow me. My data is completely corrupt. That's not an entry, not even a signal. Forget that. Pound Swiss. This is why I need to take some time off. Yeah, I'm going to change brokers. I'm going to redo everything, basically, because at the moment, nothing seems to be working, does it? So I haven't got any data I can show you on the pound Swiss. So ignore all these RSIs. Let's have a look at the 4 hours and see if they're actually right. 4.808. Yeah, so the 4 hours all look right. I can't go through the hourlies because the hourly, they're all shot. It's only certain pairs. It's as if they suddenly decided, actually, we're not going to bother updating some of these pound pairs. Well, the others are all right, aren't they? Euro pound's okay. Euro Swiss shot as well. something on that MT4. That's a corruption. There's pounds. Sorry, it's pound Swiss, wasn't it? It's this MT4. For some reason, this MT4 is just not updating data. The other MT4, this is Robo Forex. This is the same broker. Data's okay on that one, so weird. Okay, so ignore those ones. They're probably not right, are they? Pound New Zealand, is that a hit? Don't know. Aussie dollar Swiss extended on the 4 hour. We'll do the 4 hours. Nice extension on the 4 hour. Obviously, that's a good short opportunity. Again, all these big strong pushes up. We were extended already. Initial entries would have been there. You'd be scaled into a few positions on this one. That news is just totally wrong. Loads of Aussie dollar shorts on, basically, because it's been pushing quite nicely. So, yeah, still looking for short opportunities on it. We're looking for a profit take move. We haven't had a profit take move on this move. And all we've done is accumulated and broken. So you need to look at where we're potentially going on all of these as a worst case scenario. You're going to find limit orders triggering at the monthly highs. We've got the 72 moving average coming up on the daily as well. So there's areas coming up for resistance. Need to see what London makes of this. This is either, this one, this candle, this move off the news is either legitimate or it's going to be one of those. It's a V shape. Or in this case, it'll be an A shape. So we'll see what happens. Aussie dollar Swiss, though, extended to the upside. Opportunities for shorts. Aussie dollar yen, same thing. All the yens, basically, we are expecting some intervention if it carries on like this. So the yen will smash the Aussie regardless. So nice extension opportunity there. Again, drop down. Wait for the reversal alerts. Don't just get in because it's extended. Get in with the signs of strength. Aussie dollar, US dollar. Just done some drawdown control on the initial entry on H1 on that. That's just tapped straight up into the 24. Again, US dollar, we got no news until Thursday. Big propulsion gap target to the downside. We're in a downtrend. So this is potentially a pullback on that short move. Euro odd, we've looked at that. That's massively extended. So yeah, really big extension on this embedded. Again, euro. So we need to wait for some euro news. We've got the foreign currency reserves for the Swissy coming up, but apart from that, there's no euro news either. So again, we've got a real lack of potential market moving catalysts for all of these majors at the moment. So we really should be seeing a lot more strength on this. NASDAQ's just popped. DAX has just popped. We've got talking heads in at the minute. ECB, not. So, bit of a spike going up on all indices at the minute. God damn it. Should have held that NASDAQ. I took the NASDAQ scalp. I got out there. Exactly what I did yesterday with the NASDAQ. Or the other day, wasn't it? It flew up to an absolute fortune. Pound odd, 150 ADR. So we've got some movement on the DAX. So euro odd, that one's extended on the 4 hour. Big extension. As I say, we don't get down to the this sort of level below the 20s. When you get there, the market is so exhausted. Yeah, it has to do a profit take. You just run out of people basically willing to sell. Yeah, the market, other market participants are no different to retail in the fact that they will sell into a market, and at some point they just stop selling for two reasons. When you're in a bank, it's for two reasons. First of all, is obviously it's not a good idea because this thing is continuing to pump. Secondly, if you stop selling to them, you know that they can't buy. If they stop buying and their volume slows, they will start to think about selling. So you can start to push them back down again. So it's just a case of waiting on these for basically some kind of profit take. We haven't had one. It'll be the same sort of move as that. Yeah. Or it'll be an accumulation move. Either way, just some kind of pullback respite on these. when you get this extended, it's just a case of sitting and waiting for the thing to kick in. So euro, as I say, it's very, very weak at the moment. This Australian dollar could continue to rally, but it could also unwind very, very quickly as well. Pound odd, again, extended, done some drawdown control. This is a beautiful weekly level. So this is the level we looked at yesterday. And I said down here, this is where we will track into, if not down to that monthly low. The weekly at the moment is where they're starting to buy it up. See if we get the move off of it. If not, that monthly level will find limit orders sitting down there as well. Failing that, then we're coming down to the 72. There has been no profit take whatsoever on this move yet. Just waiting for them to take profit, pull back up, and then obviously your exit will be there, but just not letting up at the moment. So just done another little drawdown control on the pound odd. So big, strong push starting now. Is this Australian dollar moving? Yeah, Aussie's coming down now off the back of that euro spike. I'm going to take an aggressive on this reverse alert on M15 to get that average up a bit. Quite aggressive, isn't it? 1%. So trying to catch the top, basically. So that's 1% risk. We're at ADR. We've just attempted 125. Didn't make it. So next reverse alert, going to assume that we're going to get that push back down. We'll see. Good spot to take it. So when we were looking at the Aussie New Zealand, remember I said this is where I would look to get the aggressive drawdown control started. Obviously, if they tapped up into that level, we didn't get there yesterday. They've obviously surpassed it during the news. So from here, there's not really anything until we're getting back up to the previous highs. So we've got further to go, all the way back up to this high now, which is sort of 300 ADR. However, because of the New Zealand dollar rate and that parabolic move, as you can see, there's been no profit take yet on this entire thing. You just have to, at some point, let the pressure out. And that is what we're waiting for. So I'd be very surprised if we can get a push up to there without having some kind of pullback. I suppose it's possible, but highly unlikely. We're embedded on the H4 up here. Look. This is a very, very strong move. I would expect some kind of profit take move to kick in soon. So this is, for me, a good spot. ADR, monthly high. If we break that down below this monthly high, a lot of people are going to see this as a stop run. The SMC traders will all be going, hey, look, they did a liquidity run on the monthly high. The banks will all be going, yeah, we're starting to sell the highs. And the sellers will go, yeah, this looks like a false breakout. And everyone will start to sell, and that will just start to sell. We'll see. We need to break down below there. So this is a good spot, I think, for an aggressive position. If we can get a breakdown below that level, I think we've got a very good chance of at least a profit take move starting on this. Not necessarily a reversal, but some kind of pullback. 38 retracement. So looking for a pullback sort of around to this level here, or 50%. That would be the obvious spot, obviously, there. So we've got this level here, which is last month's high, which is not quite a 38 retracement. It's not far away, though. It's there, look. So it's different between that and that. And then we've got the last week's high. Sorry, yeah, previous week's high, sorry. There, which is at the 50%. Those would be where I'd be looking for it to come back down to, that propulsion gap or that propulsion gap. A nice, easy targets to the downside. Right, so there's your RSIs and ADRs. DAX, obviously, rallying further. So The 5-hour target, not hit yet. So if you're not using trailing stops, your 5-hour target is up there. So you're not a million miles away. NASDAQ, as you can see, is off and running. Okay, right, just catch up on the chat. Dances with Wolves. Hello, everyone. Just a friendly reminder, Epstein didn't kill himself. What? Okay. Would you do an aggressive drawdown control on Euro odd? Stop loss at 2-month low. Euro. Yeah. So that's absolutely perfect. Yeah. So if you're in too many positions on it, you need to get out fast. You need an aggressive position. Support resistance areas are the place to do it. The reason I like to do aggressive drawdown control at a obvious support resistance, and obvious is 90% of the time, which is why I've built this into the indicator, is support resistance that is obvious to everybody is a weekly and a monthly. Yeah. So where did we go and have a big bounce from? If you've bounced for multiple days, that is an obvious low. If you've bounced away for 2 days on the trot, 90% of the time it will be putting in a weekly high or a weekly low. Yeah. So when you need to do aggressive drawdown control, these levels are obvious to everybody, banks included. Banks will be buying at price levels that have previously been used for purchasing. So they will buy at these levels. Their limit orders are sitting ready to go at these levels, which is why these levels work. They don't work because there's a line there and we've got something drawn on the chart. They work because banks are told to sell at 165 and then sell it down to 162.5 and then buy it back up again. Yeah. Where did we sell it last time? 165. Okay, resell at 165 when we get there. Yeah, with 25 million in one lump sum. Bang, resistance bounce. It's not because there's a line there. It's because limit orders are there ready to trigger, which is what creates the double tops. They're created by bank orders. Yeah, so these are limit orders that are sitting in the market. So when you're looking at aggressive, if you need an aggressive position in, look at where the banks are likely to have their orders sitting. And this is why aggressive drawdown control works when you do it this way. If you just do aggressive drawdown control because you're in too much drawdown, there's absolutely no reason for it to turn, is there? It's exactly the same as taking any reversal alert. You've no idea if this is going to be a peak formation or not. A lot of the time it is, a lot of the time it isn't. So you've got a chance, a 50-50 chance every time you get a reversal alert of it being the one. When you get a load of wicks like this, though, at a level like this, and don't forget, this is not an exact level. These levels are drawn on at the peaks. These are zones, support resistance areas. Yeah. Yeah. That level was not exact there. So this is the level. Yeah. They extended beyond it. That time they didn't quite get to it. But that is why that move happened. They bought it here. They bought it again, and they bought it again. They sold it here. They just so happened to sell it at exactly the same price, which is probably a fairly big number. 165, 150. Yeah, so that's just where it was programmed to get in. So it could be programmed to get in here, not here. In which case, this is the limits you can see triggering. This is what, these wicks, these tails tell you, is that every time the sellers drive price down, the buyers are going, nope, we've got more money than you. We've got more money than you. Eventually, you're going to go, all right, and fine. We'll get out of our short position because we're sitting on a load of cash. Pop. As soon as these guys that have been shorting it start to exit their positions, they join the buyers because as they've sold, they need to buy to exit. When they buy to exit, it creates more buying pressure. We, as retail, see buying pressure. We jump on board with the buyers. We make more pressure, and it just becomes a self-fulfilling prophecy, which is why support resistance has always worked. when you want to become a smart money concepts trader, you change the word support resistance to liquidity. It's the same thing. Liquidity is market orders, pending orders sitting by banks. When it overruns it, it's a stop run. When it doesn't quite get to it, don't know what it is. You don't get in. I do. It's all the same stuff. So that is a good spot for an aggressive drawdown control position. Yeah, definitely. But I would question why you've got an aggressive drawdown control position on there. You shouldn't be that exposed necessarily at that level. But what's your odd? I mean, I've done, well, the EA's taken 2 drawdown controls on it already. So, but the average is still far away, So if you do an aggressive drawdown control to get the average down faster, that's not necessarily a bad thing. But just be aware, obviously, you might need to take a loss of 0.5% to 1% on it. So just be a little careful with that one. JC, with your DAX ORB today, you hit TP and a trailer. Is that only the new ORB, or no, the existing one does that? I can't see how to set it up with the current one. So all you do with the current ORB EA is you just set that on the DAX. So if you want to trade the pre-market, you set that to 955. Yeah, and then the second entry to 955. Yeah, so you got 2 entries. First one triggers 955 to 10. Second triggers 955 to 10. You set take breakout 1 to true, take breakout 2 to true. TP1 would be set to 150. TP2 would be set to 500. Yeah, risking whatever you want to risk. I risk $500 per entry. Trailing stops would be set to true. And percentage of opening range would be set to 150. Yeah, that's how I'm using it at the moment. Do what you like with it. And obviously, there's no right or wrong, but that's basically how it. So this setup here will trade exactly the same way as the new version. Except the new version, I have a trigger in there to say automatically cancel the opposite side, and I'm actually finding that isn't necessary. And the new version has an inside bar loss recovery system, which I'm working on. Apart from that, what you saw today is 100% triggerable with this, and it has been forever. This is what this is trading. This version here is basically doing that. It's trading the 15-minute pre-market. So that's your 15-minute pre-market, that candle, that candle, that candle. All I've done is changed it to the 5-minute, because the 5-minute, if you get that move, that aggressive, explosive move, which we quite often do, the 15-minute would have hit TP. The 5-minute hit TP a lot faster. It's the same thing. If it's going to go, it's going to go. The 5-minute is a little more dangerous when you've got a weak open. It doesn't work very well in a weak open. And obviously, if we knew when it was going to be a weak open or not, we'd be loaded, but we don't. So yeah, the ORB EA triggers exactly that. This looks like this is starting to wane, this Aussie. Didn't quite get the reverse alert. Not quite triggered on that. Can we expect the new EA on the market? When it's, yeah, if it works. I'm still forward testing. Don't rush everything. Everybody's in such a rush. You can use the actual opening range breakout EA does this, as I say. All this stuff, it does it. This is just a scaled down version of the opening range breakout EA. Yeah, I've cut all the crap out that everybody wanted in it. Again, this is kind of my issue with trying to develop products. I build them for myself to trade how I want to trade with them. Everybody wants everything in, and if you push a product out into the market, you have to do what everybody wants. The trouble is, what everybody wants is to slow it down to such a speed you can't test it anymore because it's got so much code and bloating in it for stuff that I would never ever use. So I'm trying to build this so that I use it. This is how I want to trade it. And I'm thinking of, with all my products, rebuilding them all and removing all the content out of them. So going the route of everybody seems to want the Holy Grail EA. Yeah. So everybody wants something that is super simple. They can just place on their chart. They can pick a strategy and press a button and let it go. So I'm thinking basically of stripping everything out of all the EAs basically and providing 3 strategies, for example, H1, mean reversion. So you pick mean reversion in the market reversal. Let's see how this is. Pick mean reversion, ADR reversals, or hedging. Yeah. Which time frame? H1, H4, M5, obviously for ADRs. Yeah. That's it. How much do you want to risk per trade? That's it. That's it. You have 3 inputs. Because at the moment, I'm just, as I said in Telegram yesterday, I'm completely bombarded with people that just can't be bothered to read anything. And I haven't got time. So I'm going to provide what people want. They want the Holy Grail. They want to stick something on the chart and make £1 million and sit on a beach. It's easy for me to do that. I won't get any questions then, because basically there won't be any inputs. Therefore, there won't be any confusion. Therefore, it's simple. Makes sense, doesn't it? I only trade the opening range breakout EA, yeah, on here, as you can see, has 1 million inputs, right? I only use 3, and I've only ever used 3 for the last 5 years. Everything this thing does is over complication, and it was initially for testing purposes, but it just developed into a monster. So I literally have this set up to risk a set amount per trade based on ADR. Don't use any of this. Don't use any of this. Don't use fixed stops. Don't use this. Don't use that. Don't use any of this. Don't use the RSI filter settings. Don't use moving average filter setting. Don't use the higher time frame stuff. I do use ADR on one of the strategies. Trading stops, break-evens, don't use any of that. Basket settings, I don't need any of this input because it always does it. I don't use multi-directional baskets. I just want a lot multiplier. I want to get in at a set percentage of ADR. I don't use pips. And I want it to get me out on a monetary amount or not. And I want it to do drawdown control. I could remove 90% of the code and it would do exactly what I teach in the bootcamp. But you backtest it and it would take 2 minutes to backtest a month instead of a month to backtest 2 minutes. So I think that's what I'm going to do. I've decided. I've been thinking a lot about it, and I want to just super simplify everything because it's too confusing, and I can understand why. People just are getting themselves into messes, and I just don't want that because, first of all, I don't want people to lose money because they're getting it wrong because they haven't been bothered to put the time in, or not bothered, or just haven't understood. And secondly, I just want to simplify it so that there's no... Half of these questions, I think, are caused. I don't understand whether I've got a 2-digit after the decimal or a 5-digit after the decimal. If you don't understand that, you shouldn't be trading. That's my opinion. If you don't know the difference between a 2-digit and a 5-digit after the decimal broker, or 1-digit after the decimal broker when you're trading, or 2 digits after the decimal, or 1 digit in case of indices, you need to understand it. It's your job. Yeah, you're a pilot of the Forex markets or the indices. If you're a pilot and you don't know how to fly, you're going to crash. So if I give you all the controls, you're going to look at them and go, I'm going to crash this plane. If I give you 3 controls, which is fast, slow, up and down, you'll probably be able to land. And I think that's where the problem lies. And I've been talking to some people in Telegram about it, and I think that's the way to go with it. Not so much simplify an FAQ, simplify everything down. Bootcamp, do a very small version of the bootcamp, which is do this, do this, do this, do this. If you want it automated, this product does it. And that makes my life easier because I want to get on with trading. I don't want to be sitting there. I've turned into a glorified customer support agent, basically. I literally come off of Live Room and spend all morning in Telegram, MQL5 chat, and I'm not trading, I'm not developing products, I'm not doing what I want to do, which is make more money out of trading. So that's kind of where I think I'm going to go. And I'm going to need a few weeks to sort it all out. So I think that's probably what I'm going to do. But like you just said, Johannes, when can we expect the new EA on the market? That's what I'm getting. Like the questions I'm getting, because I've shown this slightly variant version of the opening range breakout strategy, I'm getting bombarded in Telegram with, when's this coming out? How does it work? What's different? if I hadn't have shown it, I'd have saved 7 hours of my life this week. And I can't get that back. This is my problem. And I can't employ people to do this for me because, not being funny, but it's me. I am this. So for me to teach somebody the intricacies of all of this, to answer all of these questions, it's just more work than it is just to quickly answer them myself. If I can eliminate them, I don't have the questions. And everybody just starts making money quicker, don't they? So anyway, that's my plan. So to answer your question, when's the EA on the market? When it's ready. I like to forward test things for at least a month. And we've been forward testing for, what, 4 days? So sometime August, I would suspect. Maybe July. We'll see. Don't remain a tadpole. I hope you're doing well. Long time no see. I've been traveling. Last time I checked, you were trying out Fidelcrest. Well, yeah, Fidelcrest were good, but Brian, I don't know if Brian's in here, got funded with them, and it all went a bit wrong. They started, there's a lot of rules you'll find when you actually get funded with Fidelcrest that are not published that you need to adhere to, and a lot of news events that don't seem to make any sense. So we will see. I'm not funded with them. I got through to stage 2, which was actually funded. You get paid on stage 2, but I blew stage 2. So I didn't get funded with them in the end. All my candles are there on the H1 Robo Forex CCN. Yeah, as I said, Sean, that's a platform issue. That is, because they're there on this one, but they weren't there on this one. So I'm not quite sure how to fix that as a data issue. And it's only on the hourly time frame. Look, so it's, for some reason, it's just not updating data. It's like the hourly time frame is broken. Weird. Not seen that before. Again, I need to, it's all these little things. Like, now I've got to look into this today because I can't do a live stream this afternoon when don't have the charts working. So now I've got to spend an hour mucking about with MT4 this morning. It's like, yeah, my time. I just don't have any. ECB talking heads, yeah, we covered that. Morning, Brian. Oh, you are here. Is there a plus VE correlation between DAX and NAS? Today's move seems to be in sync. Yes, so basically, when you see the indices doing what they've done, that's usually down to sector purchases. You notice that the S&P, the Dow didn't do it. Yeah. So these three have in common stock sectors. The Dow does to a certain extent as well. But when you get an influx of money into a sector or out of a sector, obviously the NASDAQ has tech stocks in it, but the S&P also has other stocks in it that rely on those tech stocks. And the DAX has large corporations which have subsidiary corporations in the US indices. Yeah. So when you get someone buying the motor sector, for example, the DAX will go up a lot because it's got quite a lot of motor in it. But then Ford will also get moved on other indices. I'm not sure if that's in the Dow or the S&P, but all the people that manufacture components for Ford and for Volkswagen, when there's a motor sector purchase, will also rally. So this is why you see stock indices correlated. You'll also find stock indices will all move based on currency movement. So if the US dollar tanks, these will tend to all fly at the same time. The fact that they're all flying at the same time means that people are purchasing stocks with this US dollar. If they're purchasing stocks with the US dollar and those indices also have stocks in related to them, they will pump as well. So it's all related. You can't really trade correlation in the fact that you can't really do sort of arbitrage moves. So if you see the NASDAQ absolutely fly, it's rare that you won't see the S&P fly. If the S&P doesn't fly, it doesn't mean the S&P is going to go because the NASDAQ's gone. It might mean that the S&P is right, and that's actually what should be happening. The NASDAQ is a false move, and then you get a drop the next candle. So it's the S&P that was actually in charge and not the NASDAQ. So when you see one moving and the other one not, which one's right? The odds are the same. It's 50-50. You've got to pick one. Yeah. So DAX testing the highs at the moment. S&P nowhere near it. That's nowhere near it. The Dow has broken its highs. So it looks like there's a purchase going on and they're all probably going to rally. But we don't know. Is the Dow doing a false breakout with the DAX doing a double top and they're all going to drop? And these are the guys that are in charge at the moment. They're right not to go higher. There's no way of predicting the future. Correlation is how people quite often will try to do that, but you can't. Everything's still random. Lazy trolls will never learn. They just see your profits. And ordering Lambos. Yeah, but this is the thing, Zico, isn't it? I don't promise Lambos. I never have done. I'm coming to the conclusion that this industry, and I'm not coming to the conclusion, I've known it for years, but this industry is full of people that want to make money for doing absolutely nothing because they are programmed to do that. And they think this is a really easy thing to do because all you do is you build a robot that auto trades for you. And it's not the case. But I'm coming to the conclusion that if I built a load of products that did that, I could probably make more money doing that than trading. But then I'd just become one of the idiots out there promising Lambos, don't I? So I'm at the moment, all I'm getting is confusion and people trolling me in Telegram and on MQL5 Marketplace saying that I'm showing results which are not achievable. I'm not being funny, but yes, this is a demo account. Yes, these results are achievable. What do you think that is? People are saying, you know, well, you're trading on demo, so it's not real money. These trades were taken on the same market, whether it's a demo account, a live account, whatever account it is. These moves in the market are happening right now on live accounts and demo accounts worldwide. This 2.21% is 100% achievable by everybody that trades with this EA. Yeah, I've said over and over again, clearly, these accounts are taking every trade. Do not do this. Every day I say it. Yeah, every day people get in touch with me saying, I've got so much exposure on the Aussie, it's absolutely killing me. Well, why have you got exposure on the Aussie? Because you have. Did you watch the bootcamp? No. Can't help you. So people are losing money because of me, and I'm not going to carry on doing that. So I'm scrapping that part of it. Totally. I'm getting rid of it. So I've got to think of another way to educate people. And I think if I go back to the way I used to do it, which is just showing the account and the trades that I'm taking, that's fine. But also, you know, getting the EAs re-released with simple versions. I'm going to keep the existing versions out there. So the market reversal alerts EA won't change, the ORB EA won't change, but I'm going to release new versions of them, which are dumb. Basically, anybody that wants to learn how to trade and put the time in to make a living out of this, come join me. Anybody else, piss off and go and buy the EAs that make your Lambo money. And I'll sell a load of EAs and I'll make 50 grand a year selling EAs for Lambo people because half the people in Telegram are Lambo hunters. So I'm looking at it thinking, we've got 50 to 100 grand's worth of Lambo hunters there. Might as well sell them something because they can't operate what I sell because they're not clever enough. They're not intelligent enough to operate this. They're not intelligent enough to trade. And I think this is part of the problem. 95% of people fail at trading, not because they don't have the right strategy. They're just too stupid to do it. I can't become a brain surgeon. I'm not clever enough. I can't become a doctor. I'm not clever enough. So what did I do? I didn't try to do that. I did something else. Everyone's coming into this going, I've got no GCSEs. I've never had a qualification. I dropped out of school early, but I can sit around a swimming pool and trade and make £1 million. No, you can't. You need to be working at McDonald's. I'm just honest. That's real world, isn't it? Yeah. We have different intelligences and different people. I'm struggling to deal with the people that are never going to get it. And I'm just fed up with it. It's just this weekend, I think what's happened is I've had that many of them. I've had, you know, when you see a queue of people coming through a door, yeah, there's 1,000 idiots walked in the door and there's 2 intelligent people come in. The 2 intelligent people who come in have just got on with it. The 1,000 people that have come in that are idiots have gone, how do you work a computer? I want to become a trader. Can't help you. Sorry. That's what I'm getting. And this is what I've got to stop somehow. And I really don't know how to do it. So he's setting up new Discord channels, which we were talking about this morning. Do you think that's really going to stop people? If I put a Discord channel together with different sections in it, all I'm going to get is my questions in different sections. If I put a video at the top that explains everything, they're going to go past the video straight to download the set file and then ask what a set file is. I can't help. So if I don't need to provide a set file, if I can just release a product where you just go drop down, do I want to trade that time frame, or that time frame? Put it on your chart. You're never going to make money with it. It will trade and sometimes it'll go wrong. But because you don't understand the market, you don't understand drawdown control, you don't understand exposure, at some point it'll blow your account. Do I care? No, you just bought a product. I'm sorry, that's my opinion at the moment. I just, I've been doing this for 5 years now. And I think it's just ground me down. I'm getting to the point where I'm having a long day every day. I've got to stop it because I'm trying to also trade as well. You see me like distracted at the moment because I'm trading a live account here and I'm trading and it's doing the same thing as this. Basically, it's done the same thing as this morning. But I have to also make money. So I think if I split myself into two income streams, one indicators and EAs, not interested. If you can't work it, haven't read the manual, go away. Leave a negative review. I don't care. And people that want to trade. And I need to figure out how to deal with those two sectors of people, shall we call it. Does that make sense? I think it makes sense. But... Oh, good. For Helpy Forex. See, this is the thing, like Helpy FX, right? These guys, this is what 99% of this market is. It's people like this. And I'm coming to the conclusion that I need to be one of these people as well. Because these people are sucking my time. And meaning that the people that actually want to do this for a living and do it properly are not getting my attention because I'm dealing with these people. So if I get a load of stuff that makes these people happy, they can go off and lose money. All I needed is a disclaimer saying previous results will not be the same as your results going forward. Download here. And if you press that button, you're an idiot. And they will still press that button, I can guarantee it. But, these people are out all the time. And the strike rates and we get a monthly profit of 300 to 1,000 pips. It's all utter rubbish. We all know this. But I don't know what else to do. Signal accuracy up to 95%. What that actually means is that 95% of their signals that they post actually get through because some of them don't go through. 5% of them actually fail. Not so much the signals, the trades, the signals just don't get put in a Telegram group. Because their actual strike rate, it's all this is all misleading bollocks, isn't it? None of this is true. I've got products which actually work and actually do make money, but every now and again you need to intervene with them. So if I give these out, I think that's what everybody wants, isn't it? Some people want to actually learn to do this. So I've got to split the people. That's what I need to do. That's what I think is my answer, not switching to Discord. So I need to spend some time putting together material, if you like, that reflects all of that. And the Discord channel, someone came up with an idea for Discord, and it is a good idea, and I do like the idea of Discord, separating things out more. But I've got something very similar to it called a website. So instead of on the Discord channel, down the left-hand side, you have these little groups, which is one to do with the opening range breakout, one to do with the market reverse alerts, one to do with this, one to do with that. What I've got is a website, and at the top of it, I've got the same things. So in the Market Reversal Alerts EA section of Discord, you'll have all the information on this page. Why people can't just read this page and read these and go to the links off of here instead of wanting a Discord channel with the same information in it. I've spent a lot of time building this thing. Building out a Discord channel with all of this information is just duplication as far as I'm concerned. So I just don't really want to do it. Hang on, they're messaging me. They're online and ready to help. Speaking of trolls, help is back. Yeah, I know. GJ forecast. Yes, let's do some analysis. Much more fun. DAX, new highs. Ooh, off we go. Pound yen. So we're waiting on the pound yen for basically something to happen with the yen at the minute. middle ground, not really any signals in any direction. It's a bull run at the moment. Obviously, the pound is forecast to continue to be strong. We've got more interest rate rises coming. Not that that seems to mean a lot at the moment, but we should be looking continuation longs on this until we get to a point in the US dollar yen where it gets a little bit too hairy, and then the Japanese will pump it. So just be careful. I'd much rather be shorting things against the yen than long in it at the minute. But it's just nothing at the minute. Nothing of any interest whatsoever to me. It's just sideways. So we don't know whether we're going to continue leg up or start a new leg down. Good move on the DAX. You see the DAX now, look, has moved, whereas the NASDAQ is stuck on that propulsion move, look. Whereas the DAX has flown out the highs and the Dow. So these two now are in sync. These two are now out of sync. You can't use correlation between these indices in any real way to help you with entries. It is helpful in the fact that you can see everything going up. So it looks like we're on a bull day at the moment. So maybe a test of those highs is on the cards. S&P's already done it. Yeah. See what I mean? It just doesn't help you, does it? Knowing those. AZ, absolutely loving this rant. I shoot from the hip. I always have done. And this is why I only have like 80 odd people in my channel, because I don't I tell it like it is. That's how I feel. I can't help it. Some people are just not suited. It's probably the wrong thing to say, was it? Some people are just not suited to certain jobs in life. That's all I'll say. Yeah. Yeah. If you're not, I've even had people say this to me in Telegram. I've just bought your EA. It looks absolutely fantastic. I'm not very good with computers. Your job revolves around staring at a screen using software. Do you think this is the right career path? You're not very good with computers, yet you've chosen a highly technical, highly skilled job that uses computers. What are you good at? Well, I can build a house in 10 minutes. Maybe you should be a bricklayer. They still earn decent money. I know a lot of builders that earn way more than I do. You don't have to do this because it looks good. Do what you make money with. Some people are just picking maybe the wrong job. I'm trying to say it in the subtlest way possible. I think you know what I'm talking about. Let the Lambo company give you a referral link for buyers of new EAs. That's another thing I could do, yeah. I do think there is a good argument for simplifying especially the market reverse alerts EA, because all the strategies that I teach in the bootcamp are very simple. The EA is massively complex. I do think it would be much easier to simplify that thing right down. The existing version, though, there's so many people using it in so many different ways. Some people are using it with stops as well and still using pips with it. And I get set files sent to me and I'm like, you know, you're using pips. You should be using ADR. I know, but I'm not going to argue with you. Here's where it's gone wrong. Go away type thing. Not nicely, but you're not listening to me. So that's fine. But go away and use it as you want. So I don't want to change that. I'm not going to change it. I just need to do something else. Rajiv, I've been enjoying the streams. You explain things really well. That's cool. That's my job. That's what I'm looking to do. You are very humble. Yeah. Too many products. Exactly. This is the problem with Post. I've got too many strings to my bow. I've only got 2 strings to my bow. I position trade and I scalp. That's all I do. This is what I mean. I'm very simple. What I do is very simple. What I teach is very complex. This is the disconnect, isn't it? This is the disconnect. I've taken 15 years to learn this, and I've tried to shoehorn everything I know into a 14-hour boot camp. And people assume they're suddenly going to get 15 years worth of experience. There's a big difference between experience and learning. Everybody can learn to fly a plane. Yeah, if you fall asleep at the wheel, you're going to crash. That's the simplest way I can put it. I like the brain surgeon one the best. Yeah, they train for 7 years and spend 100,000 plus to become a brain surgeon. 10 years for most of them. Yeah, They don't pick a scalpel up until they're 5 years in. Yet we can get in front of this chart today and suddenly press a button and become a trader. That's a dangerous thing. And this is what I'm worried about. I don't want to put my tools into people's hands that don't understand what they've got. EAs can blow your account like that. If you set it up wrong, if instead of going 0.25 risk, you put 2.5 risk, you're going to lose 20% of your account in 2 days. I can't run the risk of people doing that. It's too dangerous. Yeah. I never say, all I do is I sell a product on MQL5 that does that. I'd much rather people trade it manually because then they can't muck it up. Well, they can, but you know what I mean? You can't automatically muck it up. Dangerous thing. I know that it's possible to integrate ChatGPT bot into Telegram group, but I don't know if it's possible to train it with specific content. Yeah, well, that's something I've looked at as well. Diamon's idea was good this morning. Put together a PDF, which I'm going to do, which has got all the basics in. So the rules, what position trading is, a paragraph. The basic rules, do not do this, definitely do this. Yeah, and a box at the top, a link to ChatGPT. If you've got any questions, go and ask ChatGPT. I think that's a brilliant idea. And see if it can figure out how to help some of these people. But yeah, I don't know. There's probably ways to leverage AI, but a paid trade room, separate the wheat from the chaff. Again, yeah, I used to do that, Big Les. I used to charge $50 a month for live rooms. And I would always have 20 people in there, odd, and it was great. And it works because the questions are all very related to the content. So you couldn't join the live rooms until you became a member. You became a member to do the bootcamp videos. The problem is now I put the bootcamp videos out there. Everybody and their wife can do the bootcamp, but they don't do it all. I think this is the problem. This is where this has come from. I've been doing it live on YouTube now for 2 years, and the problems have escalated in that time. So I don't want to go back to doing that though. You know, I am. You know what I'm like. I don't like paid education. I don't like all these groups where you have to pay $200 a month to access the private group with the secret signals. I don't believe in it because I believe you need to do this yourself. You need to learn this yourself. You need to teach yourself. You need to put in the chart time. You've got to put the hours in. Joining my group, I become a signal service. And I've got a signal running on MQL5 Marketplace. No one's interested in it because it's on a demo account. It's not real. It's the same bloody chart. The market is the market. It moves up and down. The price is the same on a demo account as on a live account. What difference does it make what account it's on? You can see the thing, taking the trades. It's been doing it for 85 weeks and it's generated 200% return. What more do you want? Well, it doesn't pay on a live account. You haven't got any money in the game. Fine. Skip off to the next one. That's my opinion. That's what I feel. So I just got a load of them at the minute. Paid trade room, yes. I don't want to charge you guys though. This is the trouble. I'm not in this to make money out of selling stuff like that. Education, trade. I joined Discord and then could maybe help out. As I'm very reluctant to verify with my phone number to join Telegram. Don't you have to verify with the phone number on Discord as well? I can't remember. I have ages since I joined. Yeah, I can set up a Discord channel as well. But what I obviously also don't want to do is open up another support channel, which is what I would see Discord as being. So not only do I have to look, I mean, I've got 12 messages in Telegram now waiting for me. I don't want now 12 messages sitting in Discord waiting for me for the people that don't use Telegram. All of a sudden now I'm pulled in multiple directions. See what I mean? But I think a document is going to help a lot. Can I look at oil? Yeah. So inventories tomorrow for oil. We've got that pullback we looked at yesterday. So we double topped. We've got the gap fill done, and we are on the pullback. So this is where I said this is a good chance of a bounce. We looked at this, we started contracting, and it broke really fast and hard. And since then, it's not looked back. That's where I said was probably the ultimate target. We didn't get there. We only got to that one, yep, which is this high here. So this is the range, basically. So the question now is, are we finally finding some strength to break, or are we in an accumulation leg for the next leg down on oil? So if you're going to be buying it, this is where you're interested. Yeah, this is a 50% retracement at the moment, isn't it? So 50 to 70% roughly. If you get down to ADR today, for example, absolutely beautiful buy if you've got a long bias. However, we have just put in a lower high, and we put in a very, very slightly lower low. It's more of a double bottom, obviously. So, but that is a potential higher low. Very, very difficult oil at the minute. The forecasts are still increased barrels. Yeah. So we were looking at this being our peak formation low. That was the new high. So the market structure shifted to the upside. We were looking for that. We didn't get it. What we got was that. So it doesn't help. It's almost impossible at the moment to anticipate whether we are actually in a bull market or a bear market. At the moment, we've stalled. We're sideways. We're not going anywhere. So I'd be more interested in buys down at these levels. If you're aggressive, that's where you want to get in, I think, somewhere around here today. So wait for a reverse alert, drop down M5, wait for the market to start to look a bit bullish. And that could well be it. But I'm not convinced oil is bullish. It's just not able to get the legs in at the minute. It's just got not, it's hitting a brick wall every time it tries to get higher at the moment. So difficult, but lovely pullback. Obviously, when you're going long, you want to go long on a pullback. So it's pulling back. Hourly, it might even be extended. No, it's not, because it was extended up there. So that was your short entry. So yeah, anywhere in this propulsion move, basically ADR or previous day's low would be absolutely spot on, I think. But we'll see. 125 euro odd. So we've got some more ADRs going in. Why is this disconnection? Constantly disconnecting. We are still pushing. Look, so those wicks, so that is now 4 hours of wicks to the downside, and we're pushing down again. So if we put in a higher low on this hourly candle on this euro odd, yeah, so we've got low, lower low, lower low, lower low. First higher low you see. If we don't make a new higher high, you've got your inside bar, which is reversal. Obviously, this is just started to pull down. We've got 43 minutes left on this candle. If this candle then turns green, yeah, really color these in properly, shouldn't I? You've got 3-bar reversal, push down, rejection, push, off. Nice kind of rounding bottom. All the Australians seem to be doing the same at the moment. There's your rejection on the Aussie New Zealand. I'm in on that aggressive drawdown control position, short. So stop above the high, basically. Either I'm out or it's working. This is a good spot. If we get this break on this Aussie New Zealand down below that monthly, a lot of people are going to see that as monthly rejection, monthly resistance bounce. Off we go. Looking good. See if it's got any legs though. I'm going to watch this one again. The live stream where Lee slates idiots. I'm not saying everybody's an idiot. I'm just saying that maybe some people aren't cut out for trading. This will be on replay today. Any distribution rights for Asia? For what? John. Oh, John's got a plan. Look, plan 1, new EA for beginners, set and forget. 2, Discord channel for existing EA users to chat about set files, etc. Yeah, simples. Yeah. I think this is. I've become a sprawling mess. How many groups or educators in the past have you been to where you land and you go, wow, this looks great. Where do I start? And for me, it's obvious. You start with the position trading bootcamp, because that's what I talk about all day long. It goes along the bottom here. I'm constantly talking about the bootcamp. Every time somebody asks a question, I say, have you watched the bootcamp? To me, it's really obvious that the first place you should start is day 1 on the bootcamp. Watch all 5 of those, and then it will go, I see, I understand. I think I need something that says, where should I start? First thing you should do is go and watch these videos in this order. So go and watch the why are you system hopping? Understand why you have landed here. Then understand the reason is because you're not in control of the market. Okay. Now you need to understand part of the problem is because you haven't been measuring the market properly. You've been using pips. You need to be using average daily range. So once you've watched those, understand that the support and resistance is how the market moves up and down. Okay. Now go and watch the bootcamp. You've got those basics. Watch the bootcamp. And after that, if you think you like it, these indicators will help you. Go and watch the videos about all of these indicators and see which one you think you need based on how you're going to trade, whether it's going to be manual, whether it's going to be automated. Then there are things that can help you automate that. And I need a document like that, 2 pages of A4 or 3, or maybe a PDF where people can just go, I can just go, have you done all this? No. Don't come back until you have. That's kind of what I think I need. And that should address every problem, shouldn't it? And then, like you say, I can simplify an EA. Do you want to get involved in this in a complicated way, or do you want the simple life and you just want these strategies here fully executed for you? If so, this EA will do exactly this using exactly these parameters. You can't change anything. It's $50, whatever. Or do you want the Ferrari that you can use to fine tune to help you professionally trade as you want to trade? That you need to pick a path. That's what I need. I need a way to get people funneled into the path they want to be in. Because I understand people are working full time. They haven't got the time to spend watching a 14-hour bootcamp. Then don't come and be a trader, because you can't do this in 5 minutes. If you haven't got the time, you can't do it. And this is what I say about, the plane thing. If you teleport yourself into the seat of a plane when it's in the air in Microsoft Flight Simulator, and you've never used it before, and you don't know what key is accelerate, brake, you don't know what does the flaps, etc., and you have to land the plane to survive, you're not going to. If you've spent 15 hours watching YouTube videos about Microsoft Flight Simulator, you know all the controls, you've gone out and you've bought a yoke and pedals, and you've done all the simulations for takeoff, landings, touch and goes and everything like that, and then you get teleported into the plane, you just go and land it. How do you segregate that? That is the problem. That's what I need the solution to. And that's kind of what I asked yesterday. So maybe we should all go and just join Help EFX and forget it and be easier. I'll address the elephant in the room. I'm here for your signals. Oh, if here for signals, leave. Yes, Brian. But why should I not set up a signal service to make those people happy and make a sideline out of them? That's my thought. I'm spending a lot of time doing this. Why should I not just be a signal service as well? I hate it with a passion, but money's money at the end of the day. If I can make $500 a month making signals, then I might do it. Where's gold going, John? First out the gates. Gold, obviously, we've got US dollar news coming on Thursday. So gold is basically in a holding pattern until we get some news. So we've got literally 2 weeks worth of sideways movement at the moment. We made a new higher low. We didn't manage to make a higher high. So at the minute, we're range bound and you're bang in the middle of it. No idea. I've got a little gap there from yesterday. I don't think that probably is a gap. I'm falling out of love fast with Robo Forex at the moment. So I suspect that is just a candle. So pull back long or pull back on a short. Don't know. There's no catalysts at the minute until Thursday. So Thursday, we're going to find out what the unemployment claims are. We will get movement tomorrow off this. The US dollar will move off the CAD, assuming the CAD moves. Obviously, if the CAD doesn't move, then the US dollar's not going to do much either. So at the minute, really no idea. Long or short. Long term, it seems at the moment, obviously, to be, moving averages are flattening out. So it seems to be potentially just sitting at the bottom of this range, as you can see. Not bullish anymore. I get the feeling we might see a little bit more strength coming through in the US because there's more interest rate rises potentially coming. In which case, then obviously gold would be a short. Where it would go to, though, I don't know. There's not a lot of support resistance in there. This sort of analysis on gold isn't useful to anybody, which is why I kind of don't trade the thing, because it's like you've got to be in it, luckily, in the right direction when it moves. Otherwise, you just miss it. So I don't know. One or the other. Pick a direction. It's a coin flip. Simple idea. Just block the trolls and idiots. Yeah, I do block the trolls and idiots. I don't block the trolls and idiots. I just don't want to block anybody. My problem, Amy, is I was taught to trade by someone who was ruthless. And he taught me to go off and... I've told you, haven't I? So one of my biggest mentors was on Forex Factory, which was... his name was Strat. PASR. Probably still in here. Never going to find it. Probably search for it, actually. Hang on. Right. So there's right. So Strat, yeah, said to me on here, whenever I asked a question, he said, "Have you read the thread? Have you read the forum thread?" And I was like, "No." Like, right, okay, well, go and read the forum thread. And I was like, "But there's 845 pages, Strat." And he was like, "Yeah, everything you need to know is in there." Like, well, I just want to know what the system or the strategy is. No, you need to learn how to trade. This is how I was taught, right? So I started reading it, and it's like, no, not that one. This one, the original thread. Oh, right, okay, I'll go and have a look at the original thread. 1,087 pages long. So to talk to Strat, you have to go through 1,087 pages, and then you have to go through the new version of it. And then if you can prove that you understood how the whole thing works, he'll start talking to you. That's how I was taught. And I did all of this over many, many years. And I worked with Strat for a long time in his private group, which was free, which is why I kind of did what I did. But he taught me with an iron rod. You're stupid. Go and read it again. You're stupid. Go and read it again. You haven't understood it. Go and read it again. What I now understand he was doing was going, idiot, go away. Idiot, go away. Understood it. Oh, right. Come and sit next to me and I'll teach you how to trade. That's what I'm kind of doing. But what I've actually got is a load of products I've made, which I thought was going to help people, which have caused a lot of idiots. That's how I was taught. And I think that's what I'm doing. I'm just basically passing on his education style. It's like, have you watched the Bootcamp? Go and watch it. Can't be bothered to watch it? I'm not going to talk to you. And don't come and tell me you've lost 5 grand because you haven't listened, watched, or read. Because if you haven't listened, watched, or read, I just assume that that is what you would do because that's what I was told to do. What Amy just said. Yeah, block all the idiots. Jonathan, RBA did rise rates today. Yes. So we've got an unexpected rate increase, although I would kind of expected it because their inflation figures are too high. Thanks for the follow, Strand. Welcome aboard. So their inflation figures are too high, 7%, too much. It's coming down fast, admittedly, but so was the US dollars, and that really slowed down. So you tend to get this pump. We had it on the pound as well, at 1.4. The next one won't be 1.4. So you get this sudden knee-jerk reaction to the interest rate rises, and then it calms down again. So they forgot to increase their interest rates. Well, didn't forget, they just didn't. And it's had still a good impact on this, but not enough. So they did another rise, which was on the cards. The last time they froze the interest rates, the market tanked the Australian dollar. They really didn't like it. So lesson learned, basically, they've now increased them. However, is it too late? Is the market going to be happy with it? Not sure, because the interest rates are still not able to get on top of inflation. But then again, neither is anybody else's. So it's really hard to read what impact it's going to have. So we need to keep an eye on this today. I get the feeling this will either get undone very, very quickly, or we will get a sustained push. Very difficult to tell. I was expecting the New Zealand dollar to have pulled back by now. We haven't had that either. Some of them have a little bit, but that's mainly, this isn't really the New Zealand dollar pulling back. This is the Swiss franc weakening, which has given that edge. So difficult to tell, really, what we're going to see. So the next, I would say, sort of 6 to 8 hours through London and New York is going to give us some direction as to whether or not they're going to move this in the right way. What the right way is, the market will decide, obviously. So there's tomorrow morning, we've got Lowe speaking, and we'll find out really what the forward guidance is, because that's really the important part. And this is why I'm not sure we're going to get much more movement off of this. I think the market's more interested in, right, well done. Now what? We need to know where you're going next, because you are still behind on everything. What's your plan, mate? And if you haven't got a decent plan, the market's going to run. Where it runs to is the problem at the minute. Everybody's screwed. And this is part of the issue, I think, why we're not getting the expected movements we're seeing on interest rate changes, because the market's like, right, well, the euro, yeah, it did raise it, but not as much as we thought it was. Let's put our money somewhere. Where's a good place to put money at the moment? There isn't. The US dollar. Why? Because it's got the highest interest rates. And the Canadian dollar. You got a load of money, that's where you want to stick it right now. However, that's coming down and their economy's not doing very well. Sorry, and New Zealand dollar as well. And again, look, New Zealand dollar, highest interest rates coming down. Just nothing's in sync at the minute. It's one of those weird times. Really, we just want to get back to normal inflation. And everything will suddenly become much more easy to understand and read. But until then, just have to deal with the hands that we're given. I think you just need 2 inputs for the EA: account size and strategy. Exactly, Martin. Yeah. And if you want anything more than that, and this is kind of what I think I need, like you say, if you want anything more than that, there's a big version. There's a big boy version. But don't come to me with your big boy version if you haven't read the big boy manual. There's the flight simulator, and then there's the real plane. Which one do you want? Oh, I like plane flight simulator. Okay, there you go. There's a flight simulator. But if you actually like flight simulators and you want to get your PPL, your private pilot's license, here's the manual. Read it. All I did was do the boot camp, and I stopped losing money and doubled my account. Good one, Ruth. Someday I will give back buying your EAs. See, that's perfect, Ruth. Did the boot camp, made a load of money, hasn't even bought the EA. And this is what I keep preaching. You do not need the EA to make money. The Lambo crowd want the EA. The traders, happy to just press buttons. I just pressed the button to go short on the Aussie New Zealand. I didn't get an EA to do that. I did it because I'm a trader. Those are the two people we've got, isn't it? Ernst, I've been watching the boot camps. So we just apply those manual trading concepts to the EAs. Yeah, exactly. And that's why there's so many inputs in the EA, Ernst, because the bootcamp teaches you the methodology of position trading. It gives you some basic strategies to do this with. There's no better way or worse way of doing anything. So if I set up an EA and it risks 0.25% over half an ADR and targets half an ADR as an exit, that's what it does. And if you don't like it, go and get the big boy version, because the big boy version allows you to completely customize it. But if you've watched the boot camps, you know you need the big boy version. If you haven't watched the boot camps, you just want to position trade. This is the way that personally I do it, and I think it's right at the moment. I might need to change that in the future, but the EA won't do that. Because if I suddenly decide to switch from the 14 RSI to the 21 because market conditions have shifted, that ain't. So don't come crying to me because I've changed my RSI and you can't change it, because if you understand that, you should be using the big boy version. Am I overcomplicating this? It is like somebody said, it's really just simple just to ignore everybody. But I'm not that sort of person. I don't want to ignore people. I want to help people. So I'm just trying to help. Can you please show your Aussie New Zealand position? It's on the screen right now. So 4 positions on this at the moment, plus 1 aggressive. I've done 2 aggressive drawdown controls on this, failed. So initial entry was there, second entry, third entry, fourth entry. I did an aggressive drawdown control position in here Friday. So that was an aggressive drawdown control position. Stopped out. Market never got anywhere near it, but they stopped me out anyway. I did another aggressive drawdown control position there yesterday. That stopped out. So I've done 2. So I've taken probably a 3% loss on aggressive drawdown control so far. I've got another aggressive drawdown control position going on now, which is this one here. Yeah. And that's got a 1% stop on it. 1.1. Yeah. And this is why I wanted to do this, running every strategy with every trade, so that I can show you I lose money doing this. This doesn't work. Aggressive drawdown control is not easy. This thing's in a massive squeeze. We've just had news come out that potentially could drive this for days against us. Might have to just shut a load of this out and take a 5% hit on it. Put in a negative month. Yeah. If I wasn't in this, you wouldn't be seeing it. I am in it on my account as well. But if I hadn't have been in this, because I had Aussie and New Zealand exposure on that didn't allow me to enter this trade, we wouldn't be seeing all of this. And this is what I'm trying to demonstrate. This is the best way, I think, to demonstrate the good, the bad, the ugly. What people are doing is just going out and trading 28 pairs with massive risk and getting into problems and wondering why. I need to stop that. And again, in the simple version, I can build in some kind of control for exposure, maybe, to stop people getting exposed. But then, again, you can't win. People will moan and go, "Oh, didn't take a trade there. That's because you got exposure on." Yeah, but I want to take that one. Buy the big boy version. Are you a big boy or a little boy? What version do you need? Do you need the big boy pants or the little pants? Progressing from nappy trading to training pant trading to boxer shorts. That's what we need. That's what I should name. I should release 3 EAs, and they gradually give you more control depending on what type of pants you're wearing. Pants EAs. Perfect. Have I ever made any videos on scalping 1 minute or 5 minute? No, don't scalp 1 minute. In futures, I scalp tick level, or in fact, now I'm switching actually from Bookmap, from Jigsaw, over to actually just trading the ORB strategy on the futures market. Pretty good. Make a lot of money very quickly on an ORB break. That one that I took on Friday, where I made 8 grand in here, over there on one instrument made 12 grand. I wasn't in it. I closed it out too quick. But it would have made 12 grand. That's a hell of a payday on futures in one trade. Good strategy. But I haven't done any videos on it, but the strategy is fully explained on the website here. There's a video about it, which is 2 hours long. And a massive amount of information about it. So I haven't done any specific videos on scalping because scalping is discretionary, isn't it? So whether you take a long or short or what is entirely up to you based on what you see on the chart. There's no strategy for trading 5 minute generally that is got any advantage over anything else. So bullish engulfing can fail as much as a bearish engulfing, as much as a hammer, as much as a shooting star, as much as a 3-bar reversal. You know, when you press the button, the odds are 50-50. Scalping is all about risk management. If you have got a higher R return than your risk, you will make money scalping. If you haven't, you won't. So as a scalper, the only video really you need is psychologically, am I geared up to take losses constantly? If not, don't scalp, because that's what you do. The ORB strategy I see as a kind of in-between. It's a scalp strategy, but it's got mathematical edge in the fact that we know that there is a specific time, literally a 5-minute window where the market goes crazy. And then after that 5-minute window, it either trends or it rotates. So there's 2 ways of exploiting it. You take the pre-market movement and you take that candle at the open, or you use that candle at the open to determine the movements for the day. So there's literally a 10 to 15 minute window there where you can make decisions which are highly probable with a really simple risk reward. Anything other than that window, when you press that button, you're pressing it because you're seeing either a red or a green thing appearing on your chart. That is over a time period you've selected at random, which the market isn't seeing. So it's a 50-50 shot. So scalping is not about learning a strategy, because every scalping strategy fails. Every bullish engulfing will fail. Every bearish engulfing will fail. There's a 3-bar reversal on Aussie New Zealand I'm looking at on the screen here, which failed. Where's it gone? It's over here. Yeah. Push, pause, pull. That should have been a short. Yeah. So if it doesn't matter, if get rid of that. You can show any chart and it could be on any time. This could be a 5-minute chart, a 1-minute chart, a tick chart. This could be any chart you like, basically. You just, every candlestick you're seeing here is a representation and a print of time, price over time. That is what happened from that specific time to that specific time. Has time got anything to do with what the market movement will be next? No, because over that period of time, the banks executed X million dollars worth of orders in X direction and Y direction. The next 1 minute of your life, that is not going to happen. That doesn't tell you anything. What that tells you is that's what happened over that period of time. We had an outside bar, which told me that the market was undecisive as to which way it should go next. My options now are the same here as they were here. Do I press that button or that button? Who decides whether I make money? The market. What can you control? Risk. Nothing else. Market moves up, moves down, moves through time. The only thing you have in your control as a scalper is risk. You can risk an amount of money over a movement of price. If your reward is a higher amount of money over a period of time, you'll make money. So you can't teach someone, I can teach a 3-bar reversal, I can teach a shooting star, I can teach a hammer. This is all free on the internet. It doesn't teach you how to become a scalper. Scalping is all about managing risk and taking losses day after day after day, minute after minute after minute. The other main problem with scalpers is overtrading. And that's the other thing that I'm finding revolutionary about the opening range breakout strategy for me is it stops me over trading. This morning, I've just made $430 scalping the NASDAQ at the DAX open. That's it. I'm done for the day. Yeah. So literally, I traded for 2 minutes and 30 seconds. That's it. Yeah. Scalpers want to scalp all day. That's crazy. You're just going to kill yourself, aren't you? Overtrade. Overtrading absolutely destroys you. If you've got a strategy that is literally in or out and forget about it, you'll be fine. But that's why I don't teach any strategies on those timeframes, because I don't think there is anything that works. Some days that's a loss, and I walk away and I go, lost X today. Other days I walk away and I won Y. Some days I walk away and go, I've paid the mortgage for the next 3 months this morning in 15 minutes, like I did on Friday last week. Yeah, it's just difficult to teach that. Could you have an expert mode only accessible by inputting a code? Yeah, probably. And the trouble with software, Martin, is there's hackers out there that will hack it. The reason I put all my products through the MQL5 marketplace is because MQL look after all the security. But I show everything nuts and bolts for everything that I do. So people can build their own versions of everything that I build, or get a programmer to build it for them. Some people I know in the group do build their own stuff. Fine. I build it for people that don't want to build it, or don't have the knowledge to build it, or can't be bothered to build it. And I sell something very cheaply that does something. But if I start to have things like, if you've watched this video, now you can have a code to do that, that adds a massive level of complication to my life, which is what I'm trying to simplify. Just doesn't work. My broker XM gives free signals, but I'm not interested. So any broker that gives you free signals. So think about the broker business model, right? How do brokers make money? Yeah, there's 3 ways, if you don't know. Okay, so there's the spread. Yeah, so what they do is there is a price. They offer you one price and another price, and the bit in the middle is what they make. They take a commission. Yeah, so every time you press the button, they get a small amount of money paid by you to them for executing the order. Yeah. And if you are not a successful trader, you will be on either their A or B book, depending which one they decide is their losing book. And they will take the opposite side of every trade that you place. So when you go long, they just fill your order immediately with a short, because they know that 75 to 95% of people are going to lose their money very, very quickly. So if you take the opposite side of somebody's trade that's put $1,000 into the account, you're probably going to have that $1,000. So you just take the other side of their trades, and when they lose, you win. So those are the 3 ways that makes money. So if your business model as a broker is as simple as this, every time somebody presses that or that, we make money. What do you think is the best possible way to make money? Tell people to press the button. Light bulb. Let's set up a signal service and we'll send them signals. The RSI on the hourly chart has just become extended above the 80 level on the US dollar CAD. This would be a good time to press the short button. Spread. Commission. B-book trade. They are not your friend, brokers. Their business model is the guy that presses the button the most makes the most money. Do not ever take a signal from your broker. They will just pump you reasons to make them money. That's literally all the signal is on a broker. Pitfall morning, Tammy. Morning. GU. We haven't looked at GU. So GU is not extended at all. There's no hourlies, no 4 hourlies. In fact, the RSI on the hourly is absolutely flat and has been for a while now. Long position exited yesterday on it. So it's a quick in and out. That was also an ADR, I think. No, it wasn't quite an ADR. It was an H1 M5 mean reversion exit yesterday. So that was nice, quick in and out. So yeah, I know there's no pound news coming. There's no US news coming till Thursday. So right now, where we are, we're bang in the middle of a range. Yeah. So this is going to go one of those two directions because it's either going to come and test the highs or the lows. Trying to either break out up to there or break down and do price discovery down there. That is it. At the moment, last reversal that was long on the hourly. You got propulsion gap target to the downside, which could get tested on its way up to test that, or it could push up to test that and then come back down to test that. Those are your plans. Any thoughts on position trading the VIX? No. Never looked at it. Don't need it really. The more instruments you introduce, the more exposure you're introducing into your account. So if I start position trading the VIX, I'm just adding another exposure. So what will happen is on a news event, I will get a trade entry because all it's doing is measuring the volatility of the market, isn't it? So your volatility indexes are literally just measuring whether or not the market's moving. There's the directional reason for it, I don't think is probably worth trying to trade. A lot of people I know make a lot of money out of the VIX in the same ways they make a lot of money out of crypto. No, they don't understand why though. They don't understand why they're making money. Good system or strategy, I guess, but I never tried it. Try it, let me know. I haven't got the volatility index. And as far as I'm aware, you can only trade it on that rip-off broker, which is, can't even remember what they're called. Begins with a D, doesn't it? Can't remember. But yeah, don't know. What if you're a cracked D trader and they put you on their A book? Friends now, yeah. So basically, if you're what happens is with there's a rule, and it depends which rule you follow, but it's either 60 60 60 or 90 90 90, which is basically 60% of traders lose 60% of their account in 60 days, or 90% of traders lose 90% of their account in 90 days. That is a fact. Yeah, and that is what is stipulated on every broker website. So if you go to any broker in the Europe or in the UK, they have to put by law at the top of their website that 83% of their accounts lose money. So if you know 83% of the people that deposit money with you are going to lose it, and they deposit $1,000, the odds are incredibly high that that $1,000 will go down to $0 or $200 or $100 or whatever it is. The reason it will go down is because they will make bad trading decisions, i.e. they will place a trade in the market that will make them a loss. So as a broker, when they deposit that 1,000, instead of putting their order out into the market to get filled, if you just take the other side of it for them, when they lose the money, you on that market movement will make the money. So the money basically is like a gambling establishment. You go to a bookmaker's and you deposit $1,000 with them. You bet on a horse race. If your horse doesn't win, the bookmaker makes the money. The bookmaker, in this case, is either the A or the B book. I think most of them class it as the B book. Most of the brokers. So what happens is when I deposit my $1,000 and I turn my $1,000 into $1,500, when they run their monthly and quarterly reports, they go, we just lost $500 on this guy. All right, okay, he obviously knows what he's doing. Switch him over to the A book. We'll just take commission and spread. So they still make money out of me. They take money from my spread and they take money from my commission on my trades. But they do not take money from me losing money because I don't lose money. Yeah. So they will switch you when they identify you are not a valid B book customer. And they have software for this. So in the brokerage, they will have software which will show them every order that's in place, every trader's P&L. they show every trader's positions and the bulk of positions as shown on the chart. So like me getting stopped out here, right? So the reason I got stopped out there when price was here was because they spread. The reason they spread was because on their accounts, they could see lots of people had an order in the market that would make a loss if price moved to that level. Yeah. So what they do at the overnight swaps is they spread the market to grab those orders, get that money from those B-book customers, and then they bring it back down again. Yeah. Which is why stop losses overnight tend to do things like that. There. I got stopped out there. Price was nowhere near it. Yeah. So this is what happens basically in brokerages. So they have software that says if you move price to there, you will make $1,000. If we move price to there, we make $1,500. If we move price to there, we make $2,700. So that is a 50 pip spread, a 60 pip spread, and a 70 pip spread. If you had the option of pressing a button at the overnight swap to make either $1,000 or $2,700, which would you press? They press the one that makes the most money. So they spread, stop out, and bring price back down, which is why you see things like this happening all the time on brokers. Every broker, this is Robo Forex, been established over a decade, well-respected broker, won lots of awards. They do it. Every broker does it. This is why if you use a stop loss, you're going to get stopped out because you're putting an order in the market to tell them to take you money. So stop doing that and you won't get stopped out. The only reason that's got a stop on it is because it's an aggressive drawdown control position, which is why it's dangerous to do, especially with something like the New Zealand dollar, which spreads wider than the rest. So when you start making your money, obviously they move you over onto the other books. But this is just this sort of shenanigans that brokers get up to, and there's nothing you can do about it. But because 80% of their customers lose money every month, they lose 80% of their customers. So their job is to replace customers with marketing. So they put lots of things out there online. Everywhere you go, you see adverts for brokers. So you go onto Financial Juice or Forex Factory, FXCM. Yeah. If you refresh it, you'll get a different advert for a different broker. Oh, it's FXCM. It's just different FXCM ad. It's all FXCM today. But all you see is broker ads everywhere. Looks like they've got a pretty much monopoly going at the moment on Forex Factory, but and that's basically how it all works. So you can't win with brokers at the end of the day, but these things are all driven by software. They can see everything because the whole thing is geared up for retail. And they know that retail haven't got a clue what they're doing because they don't understand that there isn't a system or strategy that has a long-term edge when you put an order in the market that makes you lose it. That was a perfectly legitimate trade. I entered there. It went down to there. They stopped me out up there. Should have been a TP. Wasn't. It was a stop out because they've got the power to do it. There's videos on the internet at conferences with brokers standing up in front of crowds calling us dumb money, calling us idiots. Yeah. And here, use this software. If you use this software, the new algorithms in this software can make you an extra 2.4% on the overnight swaps if you just use this algorithm for customer division instead of this one. All we are is a little number where they take our money. When you use that, that's it. So yeah, that's broker. What was I talking about, brokers? Oh yeah, A-book changing to being a friend. But you know, deriv, that's it. So deriv. And so deriv basically allow you to trade synthetic indices. And think about this again. I asked, and going back to my problems, but I get asked all the time, does your EA work on deriv.com? I immediately, I don't do it anymore because I've given up trying to help people. I say, you're trading synthetic indices, aren't you? Yes. Right. A synthetic index is created by the broker. That's why it's called a synthetic index. It isn't real. So if you are a broker and you have an index which you have created, you have what? The power to move it up and down. Do you think you will let people win or lose? If you created something that literally doesn't matter whether I hit the long or the short button, the broker has the power to move it against me, dependent on how much money is sitting there or there in people's liquidity, what do you think the broker's going to do? Deriv.com. Why do you think there's only Deriv.com that have these synthetic indices? It's the same as binary options. The binary options brokers were manufactured to make money because they know for a fact the odds of the market going up and down are that. So what they do is they give you a less favorable return on your positive wins. Over time, it's the same as going into a casino and hitting red or black. Eventually, you're going to get a green. You lose. Yeah. Deriv.com. It's just the same. And they have the VIX index, the volatility index, because they know that there's no direction to it. There's nothing driving it. It's going to go up and down completely randomly. We know that if you flip a coin, you're going to lose money. So I know, let's put something up that flips coins for people. Every time they press the button, we'll take a little bit of an edge in a spread. We'll take a little bit of commission. If they're right, we still make money. That's how brokerages work. So there is no broker on your side. There's no good one. There's no bad one. You just have to get in the market. That's what I learned after switching from broker to broker to broker, trying to find one that actually played the game like I wanted it to. The game doesn't get played that way. Banks and institutions don't use stop losses because banks and institutions are subject to volatility. Volatility isn't something you can control and you're going to get killed. Do you think the TDI indicator is more effective than the RSI? That is the RSI. TDI is the RSI. Go and watch some videos about the TDI with Zamal, and you will see. Yeah, there's a TDI. That green line is an RSI. It's the same thing. Except this apparently is a system. It's one indicator that's got everything you need in it. Everything you need to predict the future. Same thing. Also, the stop loss, even if they see, if they aren't real market makers or movers like the banks, to truly hit it. Also, the stop loss, even if they see it, they aren't really market makers or movers like the banks to truly hit it. No, so basically brokers don't move the market, obviously. Brokers' job is to fill your orders. And they will either fill via themselves or via the dark pools, which go out to the market makers. So when you're an A-book customer, you get executed by the dark pools. When you're a B-book customer, you get executed by the broker. The price quoted by the dark pool is what the broker quotes you, plus spread. So read your contract. Yeah, so this is something I would encourage everybody to do. Not just for safety's sake, because you are not safe, but for educational purposes. When you sign up with your broker, you have terms and conditions. One of the terms and conditions in your contract with your broker states that you are giving them full rights to execute your order at any price they deem fit. Yeah. I asked my broker to execute my stop loss at whatever level. I don't know where the stop loss actually was, but that is where they executed it. If they wanted to, they could have executed my stop loss there. They're fully within their rights. I've signed a contract to tell them to execute my order at any price they can achieve for me. Now, if they decide that at that time there isn't liquidity enough to execute my order at that level, they will execute it there because that's where they could execute it in their opinion. Yeah. Your contract, when you read it, will scare the crap out of you because you've basically just deposited X $1,000 or whatever you've deposited into your account with full reins over someone else to press the button to execute an order wherever you wanted to. Do you think I asked them to lose me $750 there? I asked them to lose me $500, but they decided to lose me $750. Doesn't sound like a lot when you're trading a 100K account. Still, it's $250 more in their bank account than should be in this bank account. Obviously, this is a demo, but this is the same execution. You'll see the same execution on ECNs. And again, there's, people ask me what's going on with all the different account types. There's not really any difference between them. The swap overnight spread will be the same on ECN, Prime, everything. So that movement overnight is where the brokers make the vast majority of their money. They always do. The market didn't look at the movement on it. You can see how fake it is, how obviously fake it is. The market moved all of that distance in the day, yeah, right? So it took 24 hours to do this. And do you think realistically, in 5 minutes, it's got the power to do that and then move all the way back to where it was? It's obviously not real price action, is it? Not really going on in the market. And it doesn't happen every night. We always get some kind of movement, but some nights it's way worse than the others. And that's where the actual spread was. I don't know where the downside spread was because I'm not in it, but that is an ADR. So you can imagine they spread it over an ADR overnight. Why do you think they did it? Because anybody that's entered short today has got to stop above the high. Anybody that's entered long today after that pullback has got to stop below that low. So if you move the price down to there, spread it all the way up to there and spread it down below there, you basically take every single order execution placed today and you put it all in your pocket. And then people wake up in the morning and go, oh, I got stopped out. Why did I get stopped out down there? Oh, it's the overnight swaps. There's no liquidity. But read your contract. That's how they work. Criminal, isn't it? If I had £250,000, I'd set up a brokerage tomorrow. Easy money. That's easy money. Today, US dollar position. I don't know. Don't know what the US dollar is going to do today. So is it that we are competing with other traders due to the broker playing with our liquidity? I wonder if it's too many lots and slippage occurs. You're not competing with anybody. You're just getting into the market. So when you press the button, the market is going to move up and down, right? Yeah, so I've pressed the button to go short on the Aussie New Zealand there. Whether they filled that order with a dark pool, with themselves, or with another broker, or whether another trader, or what, it doesn't matter. Again, overnight swaps, spreads, commissions. People ask me about who's the best broker for the lowest commission. It doesn't matter. It's a cost of doing business. You've got no control over it. Just press the button. Forget about everything. Concentrate on you, your trades, and what your portfolios and positions are doing. Forget about everything, because the only thing important is when you get in and out of a position, there's a positive return for you at the end of the day. You don't need to worry about what your broker's made, whether everyone else has made money, lost money, how your order got executed, who it got executed with. None of this makes any sense. You just need to understand how the industry works. And again, coming back to what I've been talking about for the last few days, people come into this thing going, all right, I've just seen a robot for $10 that can make £2 million a year. I need this software, MT4. I need a brokerage with someone. That'll do. Bang. And they just go like that. You've got to understand how this thing works, how this market works. If you understand how the market works, you understand how to extract money from it. This is important. This is covered in the bootcamp, which people skip the first day and go straight to the systems. When you're executing a system, you're wondering why you got stopped out. Did you do day one? No. Go back and do day one. Also, swing traders theoretically can handle that manipulation a bit easier. Swing trading is when you swing trade on any chart. You can swing trade on M5. Yeah, there's swings everywhere. That's a swing trade. That's a swing trade. That's a swing trade short. Yeah, so the term swing trading is using market structure to enter and exit the market on pullbacks. Swings are just pullback trades, aren't they? So whatever time frame you're executing on will determine where you put your stop loss. So if you swing a 5-minute chart, your stop loss is going to be somewhere like that, well within reach. If you swing a 15-minute chart, your stop loss might be a little bit higher. If you're swinging in an hourly chart, your stop loss might be a bit higher. But it depends when you enter, doesn't it? If you enter your swing 2 or 3 hours before the swap, your stop is going to be close. If you entered your swing in the morning and it moved down by an ADR and your stop is over an ADR away because you entered the swing in the morning, you're a lot safer if you use a stop. You're never safe if you use a stop, though. I mean, look at the stops. Look at the execution I got on the Aussie New Zealand. We have shown loads of examples of this in here over the years. Yeah, there's one really good one on a news trade on the, I think it was a Swiss yen. I can't remember what it was. A Swiss franc news, I think, came out, and the candle went sort of like that, just above the high. I had a stop loss up there, and it triggered my stop somewhere like that, and I lost $750 on one trade because the price never got anywhere near my stop. You phone your broker up and say, "Yep, news event, very low liquidity. To execute the orders, we had to spread wider to find more liquidity. Your order was in the spread range. But I don't want you to do that. Sorry, you signed a contract to say that you are happy for us to execute the orders for you. We've done that. Why are you complaining?" Don't use them. You won't get stopped out. Obviously, drawdown control will still get done for you as well. Look, so nothing's safe. The market reversal alerts EA. Look at that. Executed drawdown control automatically at that level. Price didn't get anywhere near it. They decided to spread it for some reason there. There was obviously a liquidity spike or something came in, but the spread on this particular pair went just above where the EA was told to execute. It executed, but price never printed there because price prints at the bid, doesn't print the ask. So you only get one, you only see what one side is doing. You don't see what the other side is doing unless you put that other side on your chart. Which is why if you go to pound New Zealand and drop down to the 5-minute chart, you'll see really what spread's all about. Look, that's price. This line here is what is painting this candle. This line here can go up there for a week here. You will never see that on a candle. You only see what is being printed by one side of price. The second side of price can be absolutely anywhere it likes. And your broker moves this up and down. Yeah, so let's say, for example, and this is why I use the example of double tops. I used to do this a lot. I don't do it anymore much. But when you see a double top, yeah, and price hits to the pip, that line, the lower line, is hitting to the pip. The upper line, when you get there, you will find that upper line will suddenly go, fine, blink and you miss it. But where's everybody's stop losses? No idea. They do, and they will spread it. You will get taken out. But you'll never see it printed. You'll see a double top printed perfectly. That's a stop run. That's a proper stop run. None of this smart money concepts rubbish. That's a proper stop run by a broker. That's what they do. Look at this one here. This is a good example. Look at the high there. Look at the spread now. Right, the spread now on this pair is 28. Let's say, for example, at that high, we still had a 28 pip spread. That is what price looked like. Anybody that shorted there and put a stop on that high, just above that high, up to there, is dead. Price never got to it. However, there's probably a lot of people with stops there, 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 and there, and there. You'll probably find at that point in time, this 29 or 2.9 pip spread actually was 7 pips. And it's not been 7 pips all day. That time it was 7 pips. Why? Because it made them $2,800 instead of 1. Yeah, that's just how they work. So it's a good little lesson because you need to understand it. And you need to understand why I don't use stops. There's many reasons, but that is also one of them. They will just stop you out. This is why strategies fail. You do a back test, right, in the strategy tester, and you use a 2 pip spread, and you get a result, right? Go and change that 2 pip spread to a 5 pip spread. See the difference. Then go and change it to a 10 pip spread. See the difference. Then if you've got tick data, go into spread and change it to variable. This will randomize spread and see the result. You will find you get such a different result. And it's literally a few pips difference is the difference between you making that 10R and losing 2R, 1R. Yeah, the results will be completely different, which is why I say many times, what you see on a back test is great. It gives you a rough idea of how that thing's performed in the past. See that on a live account and forward test it? Highly unlikely you're going to get anywhere near it, because you're never going to be able to replicate anything that is the same. And you do the same thing on two different brokers, you will get totally different results, because those different brokers have got different spreads at different points of the time, dependent on their personal needs for grabbing stop loss money. You're never going to replicate any result. And again, the EA guys that want the Lambo EA, they want to just put it on a chart and pick 3 things and go like that and make me money. They're not going to take the time to understand it. That's fine. They're not going to make it as traders, are they? Because they're not looking to become traders. They're looking to make money out of the, whatever. Idea, Lee FX brokers. Yeah. Exactly. SMC, send more clowns. Yeah, send more clowns to buy my course. That's what it is. Can you stop the spread taking stops by adjusting trading hours in the EA to stop trading at, say, 9 p.m. and start again after the spread hour? Yeah, you can do that. You can get the EA. So in the EA, if you want to use the time filters, you can do that. It's obviously got time of day filter in here. So this will only execute trades. So basically all this is it turns the EA off between whatever hours, or only turns it on between set hours. So you can set this to true and don't use the last hour of the day, and don't use the first hour of the day. So you can bracket out that period, and all that stuff won't happen. This is only for taking new trades though. Drawdown control would still be done during that point. So if they spread it by 1 ADR, and that takes into account a drawdown control, it will do drawdown control still. But the EA can't really differentiate. This is the thing. An EA is a blunt instrument. All it sees is a bid and an ask. And every decision that every EA out there makes is based on what is that bid price, what is that ask price. It can look at the distance between the bid and the ask and say, if the bid and the ask is bigger than X, don't do something. But when do you do this? So if the bid and the ask spreads just before a news event, do you want the EA not to take a reversal alert there because the spread was too wide? And then price plummets. You'll then be going, oh, it didn't work. There is no right. You just got to accept the fact that the market is going to move up, down, and you just get in and do it. All these little intricacies, you need to know about them, obviously, because you need to know how you're getting ripped off, or not ripped off, but how things work. Again, as I liken it to racing car driver. You can't get in a Formula 1 car and drive it. People have tried. If you've ever tried to drive a Formula, not very, yeah, you have, but people can't drive F1 cars because the clutch bite point is millimeters. Everybody stalls an F1 car constantly, and it takes a lot of practice just to get an F1 car to move forward. Yeah. You've got to understand the mechanics of what's going on in what you're using. This is the mechanics of the chosen trade that you're looking at now, which is trading. If you don't understand what goes on under the bonnet, how are you ever going to make the thing work? It's going to break at some point. You need to know how to fix it. If you don't understand how it works, you can't fix it. You certainly can't fly it if you don't understand how what the manual says to do in certain conditions. Aggressive drawdown control is a great example. I'm sitting in 12.5% of drawdown on this trade. What should I do? Have you not done aggressive drawdown control yet? No. Why? Have you watched the bootcamp? This is why I need this document, which needs in there. If price gets to a certain point that you're not happy with it, this is what you do. And link to the video. That's what I need to do. That's what I need to do. I figured this out. I need a if then, like programming. If this happens, then do that. Else, do something other than that and that. Yeah. If exposure arrows are 2 down, do not take more trades. If exposure arrow would be up because trade states that, can take trade if want to. Else, that's what I need to program a manual, don't I? That's a great idea. And then link to every part of the video that explains about that. That's a really good idea. I just come up with a good idea. Can you stop this video to answer that? What are your thoughts on trading one time frame, one pair? It's not for me. A lot of people do it. Most people seem to trade pound yen when they do it for some reason. I don't know why. If you've got a strategy that gives you signals every single day without fail that has an edge on one instrument, and I don't see a problem with it if you can make it work. I do. Think about it. I trade the DAX. I trade the opening range breakout on the DAX. Yeah, this is one time frame, one instrument, one strategy. Also, their strategy works on the US indices, but it's one instrument, one time frame. Although I'm trading it on 4 instruments, but it's one thing, isn't it? Whereas with FX, it's more about finding with FX, it's about finding the opportunities. When have the banks moved price to give us an opportunity to get in on their profit take? So I need to have lots of instruments available to me to find those opportunities. If I traded pound yen on the hourly chart using a position trading strategy that required an H1 RSI extension, I'd have had 4, 5, possibly 6 trades in 6 weeks. One trade a week. If you're leveraging yourself up to a level that means you can take 1 trade a week, you can do that, can't you? So you could say, I get in with 0.25% risk on half an ADR of movement. Yeah. What I could say is, and the reason I do this is because I want to get into multiple instruments at the same time. So I need to keep the risk small. What I could say is I'm only going to trade 4 pairs, but I'm going to go in with 1% risk over half an ADR and do the same thing. I'm going to get a lot less trades and I'm going to have a lot higher risk. I'm going to get into drawdown a lot quicker. Could do that. Nothing wrong with it, I don't think. However, if those 4 pairs all get squeezed at the same time, you can kiss the account goodbye. Whereas if 3 trades get squeezed at 0.25% risk over half an ADR, if the thing moves 2 ADR against me, I'm not in that much trouble, am I? Look at Aussie New Zealand. I mean, this thing, we've been in this thing for weeks. It's sitting in 3.28% of drawdown. Anybody that is scalping, yeah, if they've had a bad morning and their first 3 trades have been losers, they've lost 3% of their account. I haven't even lost anything yet. I'm just sitting in drawdown. This thing comes screaming down today, Aussie New Zealand. That disappears and turns into profit. Not that it's going to help today because we've done loads of drawdown control because it's squeezed the wrong way. Again, going to have a lost month on this account maybe. Let's see what happens. But that's the difference between position trading and trading with high risk. High risk to me is 1%. If you're risking 1% every time you take a trade and you have a losing run of 10 trades, you've lost 10% of your account. If you're risking 1% of your trade there, it's $1,000. If you're risking 1% of your trade now, it's $900. So to get that reward back is harder, which is why people look at compounding and go, oh, compounding's amazing. When it works, don't forget you can compound it the other way. Your losses are exponentially made larger, and all trades taken after those losses are exponentially smaller. That's what that risk reward spreadsheet on the website is about, to demonstrate the fact that actually, if you have a losing run of 10 trades, instead of risking 1% of your account at 1,000, you're now risking 1% at 900. You've now got an extra trade you need just to get yourself back to normal. So you need a run of 11 trades. It's all, got to understand it all. This is my point. You've got to understand it all. If you don't understand it all, you're dead in the water when you start. Morning, Blue Trader. Today gold trade up or down? You tell me, Halim. What do you think? What do you think gold is going to do today? Have you got anything that can tell you which way gold is going to go today? Maybe I'm being super simplistic, but I can't predict the future. I know it's going to go up and down, and I know that these blue areas turn grey. So we've got blue area up there, blue area up there, blue area down there, and a blue area down there. So where it is right now, which way do you think it's going to go? And when you've made that decision up, press the button, because you've got exactly the same chance of getting it right as I have. And any analysis that anybody ever gives you ever has a 50-50 chance of being right. So you tell me. Pick a direction. Daniel's going up. There you go up. But Daniel says more likely up. Daniel can't explain why it's more likely to go up, because the odds are 50-50. How can a 50-50 have an edge? Can't, because your odds when you press the button up here are exactly the same every time. It's going to go up or down. The fact that it's gone up there doesn't mean it's going to go up. I would argue it's going to go down. Gold meme. We got loads of gold memes. I know a good gold. Perfect gold meme. It's not a meme, is it? It's just. So I can tell you which way gold is going to go today with 100% accuracy, but I need you to buy my course, which is Gold Trading for Beginners. And in the course, I will teach you how to predict the future of gold movements using a very special tool that has nothing to do with computers. In fact, it's just a glass sphere. If you hold your head to it, it will give you, with 100% accuracy, the direction you need to trade. But you have to sign a non-disclosure agreement, because if you tell anybody about this, it's a secret source. Only the banks know. I will have to come after you and sue you. So I can tell you the direction, but first of all, let me just send you my PayPal account, and you can deposit the $2,000 in there, and I will then let you know. I need to clip that, and I'm guarantee if I put that up on Facebook, a load of people will buy it. I don't know. I have no idea. Right now, there's no edge. For me, an edge is having a condition in the market that repeats itself. Right now, something being in the middle of a range has no edge. I don't know. I can tell you. I don't know. Why would it draw down? Why would it do drawdown control if the EA is not operating? That setting in the EA is for taking trades. Drawdown control is not a trade. Drawdown control is scaling out. Drawdown control is not a hard stop. Drawdown control is a partial close. Martin, so do you trade on the 5-minute time frame with the RSI 9? Nope. Why would I do that? Gold and GJ are the most popular instruments. I got into GJ and been trying to figure it out ever since. Yeah. There's this thing, you know, again, picking an instrument, I don't think it really helps, does it? If you pick an instrument, the whole premise behind picking an instrument is that you can understand the intricacies of that instrument. Every instrument's got a personality. And it is true, you know, there are instruments that move in certain ways more than others. So your Aussie pairs, so Aussie dollar, New Zealand dollar, spends a lot of its, not at the moment, because the market's a bit out of whack, but it spends a lot of its time ranging. So a lot of people play mean reversion trades during the Asian session in Aussie, New Zealand. It doesn't work in the pound US because in the pound US, it's just volatile all day long. It's got high liquidity. So the low liquidity pairs are good for that sort of strategy. So if you pick one of those, you will find that you will learn how it works, and that will really, really help you understand when it gets to certain points, it's more likely to do this, that, or the other. But things that have a personality like that change their personalities. Yeah. So pound New Zealand used to trade there, and then all of a sudden, for that period of time, it started trading well above its normal average true range. Yeah. And then it returned back down to kind of ascending in its true range, and then it's kind of returned back down to a normal ATR. But here, during that period, the normal movement was very, very small. During that period, the normal movement was a little bit bigger. Here, it was much bigger. So if you get an expert at trading the pound New Zealand here, i.e. you spend a load of time going, yeah, cracked it, cracked it, cracked it. As soon as it does that, you're screwed. So I have, in my opinion, it doesn't help to become an expert in an instrument because the instrument is moving at random based on the current market conditions. The market conditions will change. The S&P 500 is the trendiest beast in the world when it trends. When it's not trending, it's not the trendiest beast in the world. So I've become, over that period of time, an expert in S&P buying pullbacks, and I'm making an absolute fortune, and I'm absolutely destroyed. What happened? Oh, I don't know. The system stopped working, so I'm going to hop to the next one. Start again. Rinse, repeat, rinse, repeat, rinse, repeat. Because you tried to become an expert in something at a period of time when it was good for a strategy. That strategy now fails. You have to adapt. So if you're going to adapt, you need to use something that works across multiple instruments with a degree of accuracy, not something that works extremely well at a specific period of time in a specific instrument, which is where backtesting comes in. You get an amazing strategy that is a Bollinger Band retracement strategy that works amazingly well in the pound New Zealand for 2 years. Take it, go back 10 years in the past, run the same strategy. Did it do the same thing? No. Why? Because that condition there was not the same back there 10 years ago. So yes, you might make money for a couple of years and then all of a sudden you wonder why you don't make money anymore. But if you can find something that historically, when a condition is met, a condition happens, and you understand, and this is the key, understand why that comes down, not the fact that it comes down, why it comes down. That's where the difference is made. This comes down because the banks have to take profit on their moves. When you understand how the banks move the market, you understand why the indicators paint how they do. So when you look at something like stochastics going up and down, and you wonder why sometimes it works and sometimes it doesn't, you can understand that the stochastic indicator is too sensitive to bank movement. Therefore, it doesn't work on any time frame, on any instrument, most of the time. Something like the RSI is showing you the relative strength between two instruments. You can understand that when the euro is having a good day and the Swiss franc is having a bad day, the RSI will extend itself because the euro's had a good day and the Swiss francs had a bad day. Because of that fact, the banks are sitting on a load of profit, meaning that they need to exit their positions. This tells me that the banks are ready to do that. Not taking a trade because the RSI is extended. I'm taking a trade because the banks are loaded in one direction. The mechanics, the engine operating under hood of this market is what I understand. I can't understand that if I just watch one thing on one time frame and develop something that figures this works here now. Yeah, because the banks on the Euro Swiss now are doing what they're doing because of the conditions in the market with interest rates, inflation, unemployment, and GDP. When that changes, this instrument's personality, its average ranges, its movement will all change. So experts in pound yen are experts in pound yen when pound yen is happy to be as their expert opinion or strategy works. When it changes, they're not. This is why you find tons and tons of EAs that appear on the marketplace and work for 3, 4, 5, 6 months, sometimes a year, and then they blow up and they never come back. This is why you find trading courses go out there and someone's found an edge in the market and it works and it works and it works, and then they disappear. Because all they've done is they've done something that they've figured out something that works for a short period of time. You have to adapt to the market because the market changes. You can't. That's why I don't think you can trade one instrument, because one instrument, when it goes wrong, you are back to square one. It's like losing your job. Yeah. I see it with other people's groups. There's groups out there where people are teaching strategies which are highly risky, and they work. Support resistance with 5% risk on each trade, that sort of thing. And it works for a period of time. And then all of a sudden it goes quiet and you're like, why is nothing happening? And all of a sudden you realize they lost 25 grand. Like, why did you lose that? Because there was a squeeze on. Your strategy doesn't work in a squeeze. It has worked in the last 6 months because we've been in a range-bound market. Volatility has expanded. Squeezes are starting. Interest rates are starting to flip. Why is your strategy not working now? Well, you've been around for 8 months. Why? Because 8 months has been really good. And then all of a sudden they vanish. Websites disappear. Telegram groups close. Signal services that have been highly profitable pop. People get chased. There's one guy had a really good signal on MQL5 Marketplace. It had hundreds of subscribers. It went bankrupt because the Ukraine war kicked off. And as soon as the Ukraine war kicked off, the markets went mental. It was the wrong side and it went pop. Because there was no contingency plan. It had never seen a Ukraine war before. I'd never seen a Ukraine war before. What did I do? Shut stuff fast. Because you have to do this. You have to adapt to it like that. So, you know, if you're just using one thing in one way, I don't think you can survive. You will be able to make it for a period of time. You know, it's just, but I don't know. I have friends, well, not friends, people I know in trading that I've met through mentorships and things that I still keep in touch with every now and again. Some of them have worked in banks. Some of them have just been learning as retail. Some of them have taken 10 years. Some of them have taken 2 or 3 years. But there's one guy in particular that literally just scalps the S&P 500. He does nothing else. He's an expert in scalping the S&P 500, but he only scalps the open and for the first sort of hour of the day. That's it, because he knows that that is never going to change. Whether the market is highly volatile or slightly volatile, whether we're in a bull calm or a bear volatile market, the open of the market is where 90% of the money is put. That's where he trades. That's never going to change unless they change the time of the market opening, or they just decide we're not going to have a market open anymore. We're going to trade Globex 24/7 as we do with Forex. In that case, he's stuffed. But that's all he does. S&P open. And he's an expert in it, but he's picked an instrument and a thing that doesn't change and become an expert in that thing, which you can do. But everything else has a changing personality, doesn't it? So I don't think you can specialize. You never know. Which way is gold going? Buy stop, sell stop, figure it out later. Exactly, Brian. That's why it works. That's why the opening range breakout strategy works. I have no clue which way it's going, do I? I don't need to. I made that money this morning. It was $1,300, $1,400 by having no clue what the DAX would do. That's the beauty of it. The reason it makes money long term is because the risk reward profile is positive. I've got no way of predicting the future. It's not clever in any way, shape, or form. It literally just places bracket orders around a 5-minute candle at a one time of day, and it makes money. Same as the ORB works off the 5-minute or the pre-market. It just makes money because we know something's going to happen. We don't know what. We don't care what. Well, we do care what. What we want is big volatile candles every day, but unfortunately it doesn't do that. Gold going off on a tangent. What did the crystal ball say again? Long. Heads long, tails short. Long. You watch a load of people in Telegram going, I just lost money because gold's gone down. You said it was going to go long. People obviously do really think I have a crystal ball. Some people. Again, going back to the beginning of the stream. This is why Mensa was invented, to measure brain power. I have no idea what mine is. Probably not very high. Just testing hedging on pound US dollar. Do you do any drawdown control when you run it? Yeah, so it does drawdown control in the same way as the others. So it will scale out of positions. So that one there, for example, on the euro odd. There you go. So it's gone long, drawdown control. So it works the same way. The drawdown control on the hedging set file is set the same, I think, at 1 ADR. Oh, sorry, no, it's 1.5 ADR on that one. Slightly wider. The reason that is slightly wider is the idea being is with the hedges, we want the hedges to play out. So what we want to do is we want to let the market move further before we do DD control. Because if this is going to hit target, the short here, what we don't want to do is do some drawdown control here and take a loss and then take a profit and then the market come up. So we give the market enough room for the hedge, if there is one on, which there isn't in this case. If there was a hedge on, we need to let that play out. So the hedging strategy is just slightly wider with its stops, basically. I started to put some labels together for these, but I decided not to bother in the end. Think about that at some point. Do you stop new trades on the EA if the total drawdown hits a certain point? Yeah, just close. I close trades out. Drawdown control. It's the same. It's Bootcamp. Everything I do is in the Bootcamp. How I trade. Yeah. So I have a loss threshold, the same as everybody else. If stuff's getting like this, I'm getting to the point where I think I'm just going to shut it and take some loss. I'll take a $1,200 loss. Get rid of it. I'll knock half of that out, knock half of that out. Get this under control. It's pushing up again, look. Yeah, Aussie, New Zealand. So this aggressive drawdown control, it's making me want to move this down. In fact, I might actually do that and just reduce this risk down to 0.5% because this has hit ADR. It's rejected these big strong wicks. I'm expecting these sellers to have taken control now. I would not expect a new high to go in. If a new high goes in, the sellers are not in control. If they're not in control, I don't want to risk 1 and a bit % on it. I'll risk 0.5% because it doesn't look like the sellers are in control. We got a bull candle going in. At the moment, this bull candle is a lower low and a lower high. It's bearish. Bull candle, bullish engulfing, but bearish. We've got a lower low and a lower high at the moment. If this becomes an outside bar, i.e. this pushes up to here, pulls back, gives us a bullish engulfing, but the wick is up here, we've got an outside bar. We've got a higher high and a lower low. Yeah. Expansion. This is indecision in the market. If the sellers have taken control to such an extent that they should be pushing price down and the market's going, actually, no, we've still got quite a few buyers in here. I want to reduce my risk because it could well fly. And if this is going to put in a 200 ADR day, why take 1% when you can take half? And then I will think, got to shut some of this. Don't forget, position trading is a way of reducing your losses by not using a physical stop loss and allowing the market to move. You are still going to be wrong. Yeah. You cannot hit the short button and go, I'm just going to hold it forever until it finally comes down. It will, but not before it's blown your account. So you have to take losses still. I will have months where I have a negative month. I lose money because there's a squeeze on and it doesn't stop. If that happens, it's a case of you shut stuff. Worse, right now I could shut 3.6 out, okay, and I could sit here knowing full well that I make on average 10 to 15% a month. I could shut out right now with a 3.6% loss and go, right, 3.7 down. We're the 5th of the month, 6th of the month. Plenty of time. If I can put in a 10% month, I'm still going to make 5. But I have all that pressure released, and I can sit there and go, Aussie New Zealand is totally wrong. Didn't do what I was expecting. I was expecting the New Zealand dollar to power up. Didn't happen. I was wrong. Banks just squeezed the hell out of me. I'm off. Bye. Yeah. But look at how long I've survived. 10 days. Yeah. Everybody else in the world, let's look at it, right? What do you think the intraday sentiment is for Forex now? Do you think the market is either long or short the Aussie New Zealand? How short, right? Aussie New Zealand, I can tell you for a fact, they are shorting the crap out of this at the moment. I haven't even looked at this today. 97% of the market are hitting the short button now, right? And they have been hitting it all week, I'd imagine. If you go and look at the historical sentiment on the website, you'll probably find, I'm not going to do it, but you'll probably find they've been short for a while. Let's do it. Let's have a look. So Aussie New Zealand is blue. Yeah, so since the 25th of May, they have been shorting the crap out of this. A minimum of 75% of the market since the 25th of May have been shorting this. 25th of May, funnily enough, is there. Yeah. Retail, every time this pushes up, I've been hitting that button. Putting a stop loss, getting stopped out, waiting for it to push up, hitting the short button, putting a stop loss, getting stopped out, waiting for it to push up, hit the short button, put a stop loss, wait for it to push up, hit the short button, rinse, repeat, rinse, repeat, rinse, repeat. 1, 2, 3, 4, 5, 6, 7% of my account is now not in my account because all week I've been hitting the short button. That's the difference between stop loss trading and position trading. I've been doing the same thing. I'm sitting in 3.5% of drawdown. I haven't lost that money yet. If this thing comes down by 1.5 ADR today, I will exit with a couple of $1,000 in profit rather than a 7% loss on my account because I kept pressing the button with a stop. Yeah. But there will come a point where I will just go, you got me. I've scaled out of a load of this as loss, as you can see. Probably lost 3-4% already on it. So I might have the same result as those stop loss traders, except this happens to me every now and again. This happens to stop loss traders every day of the week. Big difference, isn't it? And that's why prop firms don't hate to trade this way, because they know it works. But yeah, so you've got to stop at some point. You just say stop. So, you know, if you're running the EA, so the EA is taking these trades. So the choices are which ones to shut. So if you shut this one out, this 1.22 here, you're going to close out probably that. If you close this 2.27 out, you're going to close that out. Maybe. I don't know which one's which, but you know, you take a 1.3% loss, you take a 1% loss, all of a sudden now you're 2.3% less in drawdown. That average price is up here. Yeah, you get half a kick down, half an ADR to retest that high, you're out, done. Again, there's no, and this is partly why I run the EA at the moment with every single trade being taken, so people can see this all doing. This is, to me, this is educational. To others, this is confusing the crap out of them for some reason. But I think I've got too many strategies as well. Maybe I need to redo the bootcamp and forget everything. H1, M5 and ADR reversals. Scrap the rest. That's what I do. But a lot of people love the hedging. I mean, so many people get in touch with me saying they're making a fortune with the hedging. And quite rightly so. It's doing amazing. Just going to be in drawdown, but you understand you're in drawdown. If you understand you're going to be in drawdown all the time with it, because that's the whole point of the strategy, is to be in the market all the time and everything, you won't have a problem making serious cash. But not for me. It's too dangerous for me. Don't like it. Don't like it. How many years have you been trading Forex? When did you start being profitable? 15 years this year. Just over, actually. 15 and a half now. When did I start becoming profitable? It took me a good 10 years to become profitable. Break even, I would say 7 to 8, maybe. I was break even for years, for a couple of years. Mainly because I understood what was going on, and I stopped trying to find the Holy Grail. I think the key to becoming a break-even trader is when you stop that hunt. Yeah, when you stop hunting for the Holy Grail, the indicator or the EA or the strategy that gives you the strike rate and the consistency that you are happy with, that's when you become profitable, when you stop looking for that, because it doesn't exist. There isn't one. Yeah. So there's nothing that you can find out there that has an edge that goes like that. Yeah. Everything goes like that. Yeah. And that is when you give up on every strategy. Yeah. So you will give up. So you hop. When that happens, you hop to a new one. And you start. And what you don't realize is you spend 6 months and then you reset. Then you spend another 6 months. So now you're a year in. And then you reset. Then you spend another 6 months. You're 18 months in. Then you reset. Then you spend another 6 months. And now you're 2 years in. Then you reset. When you go, hang on a minute, I've been here before. Yeah. That's when you suddenly go, I understand how this works now. The market goes up and down and it's random. And it doesn't matter which strategy I use. Sometimes it works, sometimes it won't. Maybe if I had 2 strategies, one doing this and one doing that, because I've learned now what trend trading and what mean reversion trading are. Maybe if I did that, it would work. And all of a sudden what happens is you find yourself doing that. And then before you know it, 12 months has passed and you've looked at your P&L and gone, I didn't lose. That's the point when you start to understand how this thing works. And it's that point you become break even. That, as far as I'm concerned, is when you become a profitable trader, because you stop losing money. You come out of that 80% of traders that lose 90% of traders that lose 90% of their account in 90 days. You stop doing that cycle. When you stop losing 90% of your account in 90 days with each system that you try, and all of a sudden you can make an account last 6 to 12 months. That's it. You get it. And that point is where you decide, I want to do this or I don't. You either go, that Holy Grail thing doesn't exist, I'm not going to risk anymore, or you go, I can do this. And then you become a trader. That's it. There's a point in time. But you'll never know what it is until you get there. Which is why, again, in the bootcamp, I say, give it a few months. Try it for a few months. See how you get on. If it's not for you, off you go. This isn't for everybody. Hop. You'll find something if you look long enough, but you won't find it if you keep yourself in that cycle. There's a PDF, this PDF. So that moment I've just explained is called conscious. Where am I? It's this Eureka moment. Yeah. So you spend your entire cycle in conscious incompetence. You know you're not making money. You don't know why. And this move from here to here is not caused by a system, a strategy, an EA, or anything but you identifying the fact that this cycle gets broken. Then your strategy, whichever one you stopped on there, you've hopped and hopped and hopped and hopped and hopped. And when you get to stage 3, you're on a strategy. Then you start executing that strategy in the way that you understand it, and the fact that you are going to lose and then you are going to win, and you are going to lose and you are going to win. And eventually it's going to become a break-even system. That is where you move up to walking on water and you think, I get a lucky run and I push it. You push the edge and you increase your risk. Then the market kicks you in the arse and you drop back down from this point to this point, or rather this point, and then you go, I'm not staying here, and you jump up back onto there going, right, the reason I lost is because I increased my risk. I'm not going to do that anymore, and I'm just going to accept the market is random, and if I have a strategy with an edge in the long term, I'm going to make money here. I'm not going to make Lambo money. I am going to make enough to make the mortgage happen. Autopilot. This is where you start looking into automation, because you realize that it doesn't matter whether you press the button or anything presses the button, as long as you have exploited an edge, you've found an edge that has a long-term return, and it's going to have a hideous run, it's going to stagnate, it's not going to work when the market's doing this, and it is going to work when the market's doing that. When you get to that point, you just go, I'm just going to build an EA. And that's where I've been for years. But this here takes some people 18 months, most people, I would say 3 to 5 years, some 10 years. That's the Holy Grail. This is the Holy Grail. It's that bit. This, you know it. And this is the thing. This is what keeps you hunting for the Holy Grail. You see people like me having these systems that make money, and you go, must be a way to make money out of this market. The banks make money, but you don't realize the banks make money because they have money. If I have 25 million and I can press a button with 25 million, the thing's going to go down. So if I press the short button, I'm going to make money. I can't not make money. It's impossible. What you don't realize is you are the opposite side of that. When you realize that there is nothing that can predict the future, there's nothing that can make you money long term and give you a 70% strike rate like Happy FX or wherever it is, say we got a 75% strike rate. When? Last week, last month, last year. If it's last year, I'll snap your arm off. But you can't show me that, can you? Because it didn't happen. So let's talk about last week when you had a 75% strike rate, or last month, or the last quarter, which was really nice and rangy, where you had a good run. That's when I'll adopt your strategy, and then the market will go into an expanded volatility and it will all go wrong. That's when you suddenly realize. You go, aha. That's what I need to do. And just wait for the market to come back in your favor. All of a sudden you're profitable. This worth a read. Yeah, I start off with that as a bit of a joke. Yeah. But I got this from Strat, the guy that I was talking about earlier on Forex Factory. When I was doing that, I learned all this stuff in there. And that's where you will find something that suddenly, that's it. But it took me nearly 10 years. And what do you class as being profitable as well? This is the other question. It's like, what do you need to pay the mortgage? And people don't realize that you need money to do this job. It's not something you can just jump into. I mean, look at this market today. Yeah, you've got to be able to survive all this. This trade hadn't worked out and it had gone down 2K today. Yeah, I've got to be able to survive that for five days on the trot. You've got to be able to survive it, because it's not going to happen. You need money. If you want to make 10% a month, which is very achievable, and you need to earn 10 grand a month, you need 100 grand account. That's the maths. Very simple maths. People think, again, I get asked all the time in Telegram, can I trade the market reverse alert CA with $500? Yes. That's what my answer is now. It used to be no, because paragraph, conversation, 3 hours of my life. Now it is yes, you can. Because they're asking a factual question. Can the EA trade with a $500 account? Yes. It will take trades. Will it make money? No, it will blow your account. I've given up asking, because what they want to do is turn 500 into 5,000 in 3 weeks. Not going to happen, is it? Of course it's not. And they're on the unconscious, the conscious incompetence path. They will either find the eureka moment or they won't. Some people, I think, you will find, will never There are people I know that I've seen floating around Forex Factory and other forums and other places. I've seen them floating around for 10 or 15 years. They're still floating around. They're still doing different strategies. They're hopping. They've never made it. They've never found the eureka moment. They never will, because it's just not in their brain to do it. And that's fine. And that's when you need to identify that you need to give up, which is why you shouldn't trade with any money you can't afford to lose, because 90% of people lose 90% of their accounts in 90 days, even with a profitable strategy. Not the strategy's fault. It's the person. Because when the strategy loses, if you started position trading 3 weeks ago, the first trade you took was Aussie New Zealand, do you think you would still be in the boot camp? And do you think you would ever do this again? No. Have you got the brain power to understand? Here we go. Helpy FX is coming in again to chat. Have you got the brain power to understand that this is one trade this year that isn't going well? Or have you got the need to find something? God, they're busy. This is the third attack from Helpy FX today. Giving up fighting them. How many? The Holy Grail is that light switch in your head. Yeah, exactly. That opens up the markets and removes the shrouds and cloaks and mirrors. And yeah, exactly. I give people the. I tell you, I don't give people the switch. That's not the right thing to say. I tell people the switch is there. Yeah. £5 for marketing, please. There you go. Everything's false. Yeah, I mean, I don't give people this. I don't flick the switch for people. I tell them the switch is there. That's the important thing. This is why this sits at the top of the website. I should make it more prominent, really, because it's very important. Like somebody said to me in the Telegram group, or said in the Telegram the other day, you can lead a horse to water, but you can't force it to drink. Yeah, you can tell people till you're blue in the face and argue till you're blue in the face that you cannot predict the way that gold is going today, and they will still come back every day and say gold is a buy, and you will still say there is no chance of you knowing that, and they will go, yep, because we hit this level, this did that, and there's a pivot point there, and this, that, and the other, because they're still on the conscious incompetence path, because they don't realize that they still can't predict the future. You can tell them till you're blue in the face every day for 2 years, and they will still keep doing it. You tell them the switch is there, but unless you personally go, right, I'm going to stop system hopping, I'm going to sit somewhere for a year, and I'm going to figure this out. That's the person that makes it. That's the 5%. And it's got nothing to do with a system or a strategy. But what we're doing is we're bombarded every day by systems and strategies. We see all these people making money with these systems and strategies. Yeah. But we join groups at the time when something is happening in the market. And whether you join a group and you stay there depends on whether it's going well. And if it is going well, you stay for a bit. When it stops going well, you move to a new one. If that one isn't doing well, you move, and then you go, this one's doing well. And that's what you do. It's a cycle. You'll never get out of it unless you understand it's there. That's the biggie. That's a good little session today. We talked about a lot of stuff, didn't we? It's nice not to talk about trading because there's not a lot to talk about at the moment. Everything's squeezing horribly and we're just stuck. So if you want to do drawdown control automatically, what are the EA settings for ADR and mean reversal strategy? So the settings up to you, but I use 3/4 of an ADR and a third, which is what I've kind of found seems to be a sweet point. It does get you out. Depends on the strategy, obviously, but sorry, one ADR. This I'm thinking of the ADR reversal strategy. So the mean reversion, H1 mean reversion, is one ADR, a third of the trade. So the reason for that setting is because of that setting. So if we're getting into our trades a third of an ADR apart, let's say that's an ADR, that's our entry. So if we get into our trades 2/3 of an ADR apart, 75% of ADR, What it allows us to do is get in, get out without doing any loss control, any drawdown control. So if you set that to anything less than the distance between the trades, you will always take drawdown control before you get into a new trade. Nothing wrong with that. You are keeping on top of drawdown control faster. The faster you do drawdown control, the lower your drawdown will be. However, the more you will take in losses quicker. There is no magic bullet or right setting. So if you use something slightly larger than your distance between trades, if you're going to do it per trade, then that is a good way to do it. Because at the moment, obviously, bear in mind, if you're using a lot size multiplier like 1.3, which is what I use at the moment, when you get into that first trade, if it's 1 and it moves up, when you get into the second trade, that's going to be 1.3. When it moves up to 1 ADR, that becomes 0.7, which automatically makes your break even move up. So it becomes easier for you to exit the trade. If you're not using a loss multiplier, and that's a 1, and it moves up, and your second trade is also a 1, and then it moves up further, and you do drawdown control, that becomes a 0.7, and your average moves from there up. It's just that with the 1.3 multiplier, it moves up a bit faster. So this is what I mean about this EA. There are a lot of settings in here that make a big difference with a very fine tweak of them. But they're there for testing purposes, because what I think is good, people disagree with. People disagree with this half an ADR. A lot of people in Telegram have messaged me over the past week or so saying that's pointless, half an ADR. All you're doing is you're not letting your winners run. You say you should let your winners run, but then you cut your winners short. They've got a point. And that's fine. Go and do that. I give you the control. But you need to understand what the control does to be able to control it. Yeah. It's a Swiss Army knife. If you change that to 0.75, sometimes you will get a better result than if it was 1. If you change it to 1.5, sometimes you'll get a better result. Other times you won't, because the market is random. So whatever you set that to, it's going to be wrong, but it's going to be right. Yeah. So sometimes it will be the worst thing impossible. You should have set it to 0.75 because it went mental like that. It went 5 ADR against you in one day. And if you'd have set it to 0.75, you'd be in less drawdown. You'd be going, oh, I'm changing it to 0.75. You change it to 0.75, and what will happen is it will get you out of loads of trades with drawdown control just as they turn, and you would have made a profit without taking that loss. Then you go, oh, I'll change it back to 1. Yeah, change it as much as you like. There is no setting that works. Change that as much as you like. Random. Doesn't matter. Pick something that's roughly right for you. Backtest on a pair. See the difference between 1 ADR, half an ADR, 3/4 of an ADR. Space your trades. Half an ADR, 3/4 an ADR, 1 ADR. Look at the results, watch them on the chart, see the difference and go, I'll have that one. Because what I have here and what you have there is totally right. And it's totally wrong, depending on whether or not the Aussie dollar New Zealand goes up or down today. That's what makes the decision as to whether my drawdown control is right or wrong, not the setting in the EA. The market decides what you make. You have no control over that. You can press the button and either you use a stop loss and you get out because you're wrong, or you stay in the position and you wait. So everybody that's stopped out on this week has been right to stop out on it. They were right. It was going to continue, but they lost money doing it. I was wrong because I've stayed in it. But when I get out of this, and this happens virtually every time, when I go, enough is enough, Aussie New Zealand, and I cut that, the next day it does that. Oil was a prime example before Christmas. It was going down like this, and I was like, I'm not familiar enough with this instrument. I just started trading it. I'm not familiar enough. I'm getting out. That day, putting 2 ADR move over the next 2 days, it went 2 ADR. Not only would it have got back to break even, it would have made an absolute fortune. I pressed the button there and it did that. Why? Because this is why they call this a squeeze. the market is squeezing the short orders to the point where they go, I can't breathe anymore, I'm out. When that squeeze is over and there's no one left to squeeze, no one is willing to press that button anymore, they go, can't do it anymore, boys. There's no one else to sell. Okay, bang. And the point that you get out uncomfortably is invariably when the market actually goes with you. So you have to hold out as long as you can. So doing drawdown control along the way helps you stay in the move longer so you can benefit from that move. And whether you decide to target half an ADR or you decide to target an obvious propulsion gap, 50% retracement move if it's going to be a long, it's entirely up to you. Settings in the EA allow you to do whatever the hell you like. But you see, the people in here, these 50 people in here that were 86 at the start of this, have sat here and they've listened to this. The other 30 have gone off, put it on there, and then they're going to come back and ask that question. Because some people have got the time to put in to learn, some people haven't. That's my whole problem, is I can't deal with everybody's questions when nobody's willing to listen for long enough, because there's two different paths of people. Amy needs this one. Someone else that's just come in and asked if gold is going to go long or short needs the simple version with 3 inputs. Yeah, that's what we started the conversation on earlier, wasn't it? Mohammed Muzamil even. I backtested GJ pair every day on 5-minute and 1-minute and 15-minute with TDI after the London close to get my accurate level for quick 20 pips. If it's working for you, do it. All I would say is, though, you're using pips as a measurement of price. Go and watch the bootcamp. Link's been going along the bottom here all day. Go and watch the bootcamp and you'll realize why pips are irrelevant. Right now on GJ, 20 pips is 20% of market movement. Yeah, so GJ is 126 ADR. How do I do this? Let's just do times 20%. 25 pips. Yeah. So if you're using a 20 pip stop, you're using roughly 20% of the average daily range of the pound yen to say, stop me out. When the pound yen's ADR is at 290, your 20 pips stop will get hit within minutes. It'll be dead virtually every trade, because literally every candle will be way more than 20 pips, because it's now moving 290 pips a day instead of 126. Yeah, work. You're exactly what I've just described. Somebody that has picked up a strategy and it seems like it's working at the moment because you've backtested it over a period of times where 20 pips is working. When the pound drops its interest rates and the yen increases its interest rates for the first time in over 6 years, the pound's yen ADR will go through the roof. That strategy you're trading will fail immediately. If, however, you base your stop loss on the average daily range of the instrument, your system and strategy will adapt with the volatility of the market. Go and watch the bootcamp. ADR. Have you only recently changed position spacing from half to 3/4? No, I don't think so. Been 3/4 for a long time. But again, this is mine. Half an ADR is kind of the very bare minimum. I think that's what I say in the bootcamp. No less than half an ADR. 1 ADR is fine. 1.5 ADR. Entirely up to you where you space it. But 0.75 is what I'm using as a sweet spot. But again, half an ADR is a little bit aggressive. Look at the ADR account. So this is the ADR reversals strategy. The spacing on the ADR reversals is half an ADR. Yeah. Because the ADR is a scalp. So we want to be in, excuse me. And if we're not out on that one, we're getting half an ADR apart. Because it's been a big, strong push, more than its average daily range, most of the time we will get a pullback, either that day or the next day or the day after that. So we want to be in faster so we can get out faster. It's a scalp. It's targeting a little third of an ADR or 1/4%, very quick. So you want to be in and out fast. H1 spacing is a little bit bigger because we want to be, we don't want to be in too aggressive because, yes, we've got extended on the RSI on the hourly, but as we know, we can go further. You can go further on the ADR as well. But the idea behind the ADR is if you get a reversal at 100 and it continues to push for that day above 150, you can take a second entry and then be out on the same day pullback. But again, back test, Tim, go and back test with half an ADR, take exactly the same testing conditions and back test with 3/4 of an ADR. Look at the difference. Which will you be more comfortable with? But backtest over the same period so you can see the difference in the results. There isn't a right result. It's mine. 3/4 of an ADR is right a lot of the time. A lot of the time it's wrong. It's wrong here. If I'd have, look, this is what you would say to yourself. I got in there. Oh, if only I'd got in when everything was 1.5 ADR apart. I'd only be in 3 trades and done 2 drawdown controls. Yeah. When you take a trade and it goes like that, and then it does that and moves up 3/4 of an ADR and then comes down like that, you'd be going, and you're stuck in this trade because you didn't hit TP, you'd be going, oh, if only I hadn't used 1.5 ADR, if only I'd used 3/4 of an ADR, I'd be out of that with a beautiful profit. You have no idea what's going to happen. So there is no setting. The opening range breakout EA, you know, it's like, oh, today, if I took the 15-minute opening range break, it was an absolute nightmare. It pushed up, it didn't hit target, it came down and stopped me out with a loss. If only I'd taken the 5-minute opening range break, I'd have made a fortune. Every day, that is going to be a different thing. Every day, a different setting is going to make a different amount of money. Every day, whether you scale in 3/4 an ADR, half an ADR, whatever, it's going to make a different impact on the future movement of that market. So this doesn't matter. It's random, totally random. So just pick one. Bigger spacing, less drawdown. That's literally it. Bigger spacing, less pain. Less pain, less reward. Yeah. Same as anything. The more money you put in faster, the more chance you've got of losing it. It's like a fruit machine. Why do you think in Las Vegas, when you go and sit down at a fruit machine, someone comes over immediately and goes, would you like a drink, sir? Yeah. Have you got a menu? No, it's all on the house. Oh, okay, brilliant. I'll have a whatever. Sit there. So you run out of drink. Want another one? Yeah, they're free. What am I doing? Constantly just putting risk on the table. Yeah, they feed you free drinks so that you keep putting risk on the table faster. The drunker you get, you go, oh, stick dollars in now, not quarters. Yeah, the faster you get in and it goes against you, the more pain and the more risk there is. Amy, for me, it's a psychological thing. If I do drawdown control by hand, I always struggle with my decision. Too early, too late, too less, too much. It's better for me to do it automatically. Yeah. And that's why I've converted. I didn't, if you go and watch the previous boot camps from sort of a year or so ago, I didn't use automated drawdown control. Everything I did on drawdown control was always manual using the profits I'd gained. I've converted now to automating this and doing it as we go. So again, I think in the boot camp, I teach that, I can't remember because I haven't watched the boot camp for a long time, obviously, but I think I teach that you use the profits, obviously, which you do, that you make to do drawdown control when you need to. And it's obviously a personal choice, but I'm becoming much more of an advocate for having this automated because it takes it out of the equation. Just think if I had not done all of this Aussie New Zealand drawdown control over the last, where are we? 24th of May. Let's have a look at what this has actually done, Aussie New Zealand drawdown control wise. So we've got so $5, it's $1,000, 1,800, 2,100, Go back to the 25th, it started taking trades. So $2,100 in drawdown control, 2.1%. Yeah. So I've scaled out of 2.1% here. I've lost minus 2.1% of my account here doing drawdown control. However, my risk is lower than it would have been if I hadn't have done it. So instead right now of sitting in 3.5% of drawdown, because this would have been a full size, that's had 2 DD controls done on it. So you can add that would have been a 1.2. That would have been probably a 1.8. That position has done one. So that would have been a 2.6. Done one on that. So that would have been a 3.2 or something like that. Yeah. So this is now a 2.96. Can't see it there. This is a 2.27. This is a 1.2. This is a 0.6. So not only would I be in drawdown, I would be probably in 6 to 7%. I would have all done drawdown control automatically, but instead of doing it here, I probably would have started doing it here or here, probably 4th position. I probably would have gone, right, need to start doing it. By then I'd be in a lot more drawdown. So I'm becoming a much bigger fan of doing it as you go, because we're banking as we go. So why not do the drawdown control as we go as well? And if it happens that we have a month where we just do more drawdown control than we bank, so be it. I think this is going to be a little bit less profitable, but way less painful. In a squeeze, this is a squeeze. So I think I prefer to do it this way. And like Amy said, 95% of your trading is psychological. The reason you lose money is not because of a system or strategy or anything else, but your psychology. And that's the whole premise of the bootcamp. Day one in the bootcamp, I list the 15 problems or 10 problems, or however many it is that every trader has. Every single one of those is caused by you and your own ability to do what you're told, and the fact that you cannot time the market. So if you stop trying to time the market and remove the stops, you stop trying to do things manually by automating it, you take everything out of the equation that doesn't work in trading, and it suddenly works. And even when it doesn't work at a better rate. Yeah. So instead of taking huge losses, you still take losses, but they're just not as bad because you're not hanging on to losers. And this is part of the reason I got so upset, not so upset yesterday, but part of the reason I got so knocked back this weekend was because I've had a few people, more than normal amount of people, give me abuse in Telegram and on socials because I don't use a stop loss. You know, it's the old no stop loss gang. I used to be one of those people, the no stop loss gang. As soon as I see someone not trading with a stop loss, I'll be a gambler. What I didn't spend any time doing was looking into what they were doing. I was immediately, no, you're crap, you're useless. All you're doing is you're trying to rip everybody off. You're selling a load of products which don't work. And there's only so much of it you can take. And I can understand why, because they haven't spent 15 hours trying to figure out what the hell I'm doing. They look at the results and they can't figure out how I've made 68% in a month. So it must be a scam, instant scam. No, get rid of it. Let's have a go at this bloke, con artist, blah, blah, blah. And that's all you get. But it's because they don't understand. And if they came in today and saw me sitting in this with a load of loss in there, they might change their mind and go, oh, he takes losses. Hang on a minute, he doesn't use a stop loss. No one's got any time. Can't be bothered. Let's immediately revert to attack. But it's because of their psyche. People are angry. This is a hideously toxic industry because people are cross and angry all the time because no one can make this work. So all they do is they get cross and angry, and every system they come across, they go, oh, another $300. I've already spent $3,500. It doesn't work. They're cross. So the first thing they do is get cross. Before they've even looked at something, they're on the back foot of angriness. What does that do to your psychology as a trader? You're never going to be able to manually execute something if you can't keep that under control. I'm not very good at it at all. So I build things that do it for me. Then I don't have to worry about it. So yeah, I go there and I go, oh, What a crap day. Never mind. But I've got the hindsight of having 3 years of really good days. We've all been in here in the live room, and I've said this afternoon that could be gone. Yeah. And then we come back in the afternoon and we're sitting in 0.14 positive with 3.5 banked. We came in the morning and it was 7% in drawdown. I've been through that 100 times. But people that come here for the first time, that's it. Physically impossible to get that money back. Nope, not going to happen. You're dead. Yeah, I'm going to come back in 3 weeks. You'll be blown. Your website will be gone. You won't be around. Go and look at when my website was launched. I've been around a long time. You know, but it's just the mentality, isn't it? I think there's a lot more people like that out there now because it's becoming more accessible. So there's a lot of people out there that just want to see the world burn, I think. Go watch the Bootcamp buzzer. Yeah, but I'd be... Brian, can you imagine? I literally wouldn't be doing anything but watch Bootcamp buzzer. This is where I put this along, like this thing at the bottom, the scroller. My hope was that people would go, oh, he's got a website. I can learn about that. No. Where'd you get that EA from? What's the set file? It's just lost 7%. This is rubbish. Did you pay any attention to anything at all while you were here for the 3 minutes you were here? Nope. It's like Britain's Got Talent. How long have you been trading? 6 months. Babypips.com. How long have you been trading? 6 months. Babypips.com. How long have you been trading? 15 years. You're system hopping. You're never going to stop. Off you go. How long have you been trading? 3 years. I've just gone through the boot camp and I'm interested in the EA. I just have a question about it. Ting! Let me help. That's what I want. There's got to be some of them out there. And it's the same faces I see in here all the time are the ones I know that are actually going to make it. Because everybody I see, it's my first time in here. I'm like, I won't ever see you again. So I'm making myself cry now. Oh, this is a long stream, isn't it? How long have we been going? Time. 20:11. I've got to stop in a minute because I've got to do stuff. I've also got the dentist this afternoon, so this afternoon stream is going to be really short. I'm not using a VPS, and I found that when I turn off my system and restart it, the EAs all come back with default settings. Yep, you can't turn your VPS off. So in your VPS, or it's nothing to do with your VPS, it's your MT4, right? So when you shut down MT4, your profile is automatically saved, right? On a VPS, sometimes they do auto updates. When it does an auto update, it restarts the machine. It doesn't shut down MT4. So when you set your VPS up, get it exactly as you want, all your charts, everything set up as it should be, right? And then you go to the profile. Can't see it. Down here. Yeah, down here. You go to profile. And you save the profile as I just used default. Yeah. Now that profile is saved. Every chart, every setting on every indicator and every EA is saved as that profile. So if you have a power cut and everything goes down, when you relaunch it, that default profile is loaded and everything is exactly as it was. But VPS, if your VPS is rebooting, speak to your host and say, I need auto update turned off. And obviously, you don't turn off your own system. If you turn your system off, yes, it's going to go. Because you can't. You need it off. You need it on all the time. Keep it simple, yeah. Hi, everybody new to the channel. Hi, Michael. Sorry, I wasn't directing that comment earlier at you. Hopefully, you'll come back. Go and watch the links on the bottom. It's a marathon today. Yeah, I've been going for a long time. So I'm going to have to go because I've got stuff to do. I'll be back this afternoon at 2:20. I've got the dentist at 3:30. I've got to leave about 3 o'clock because I've got to go and get the kids from school, pick them up, rush them to the dentist for 3:30. So this afternoon's live stream is literally going to be from 2:20 till about 2:50, half an hour. So we'll trade the open of New York. We'll do the opening range breaks. And that's it. That's all I can do this afternoon. So I'll be back tomorrow morning at 7:50 as usual. But this afternoon's live, it's going to be very short. So we'll see how we get on. But good stream today. We've cleared a lot of air, covered a lot of stuff. You know, if you're still here, you're learning. It's all good. That's what we're here for. Right, so I'll be in the Telegram group if you need me. I've got to go and answer all this lot now, so that'll probably take me through to New York. And then obviously back this afternoon for the New York session, and obviously we will see how the ORBs go, the pre-market breaks this afternoon, see if we can make some more money. Yeah, and I need to obviously work on this EA as well, this version. So I might have a way actually to shoehorn this into the existing one. But I've got to do a lot of testing, so I'm hoping, but if not, it's 50 quid. Right, I'll be back this afternoon. Anybody needs anything, let me know. Otherwise, I'll be seeing you this afternoon. Have a good day.